Oh shit. Good morning, guys. Quick, which states are what? Holy fuck. Well, that's a start. Tup and Rad run day. Maybe. Tup might be interesting today. Got a dillionaire this morning. Oh, the big boy dad. Welcome aboard, man. Thank you so much. Hit me up on the Discord. I'll get you added after the stream today. Appreciate it. Everyone forgets about Nebraska. No? I don't know. Maybe they do. Does anybody care about Nebraska? Crude to go for another leg up here, do you think? Starting to seem that way, yeah. Back over 85, up 400 BPS today. Holy shit. Yields are getting crushed. Looks bullish. Nice. Ill shine Shinelfly? Shinefly? Thank you so much, man. Welcome to Zillionaire. Hit me up on the Discord. I'll get you added. I appreciate it, guys. Nebraska, the country? I never heard of it. It's not a country. I think we'll fill the overnight gap or just cruise all day. We could. There's still a little bit of put interest, although a lot of the put interest at 60 is sold. And we have some pretty decent call interest all the way up to like 43.85. Between 43.85 and 4400 could flesh out a little better than it currently is. But we'll see how that goes. Futures has a like solid bounce. Like this is a decent bounce on futures here. I think I want to grab some like what do I want to do? I don't want to sell this. Upstart went below 27.40 in the pre-market. Does that invalidate the pickles pick? Let me see. I think it's more important that it's doing it in during trading hours, but let me take a look. No, there's resistance at 27.44. So if it holds right here, that might be okay. It's still getting shorted really hard though. Like they're still getting liquidity on it. They got quite a bunch in pre-market today. Same for GME. Although not a lot. See how there's very little left from ETFs here, right? I think XRT might be at its lowest level all year, or maybe ever. So, um, they're gonna start turning to the lending pool, right? And we're starting to see a lot more movement. In, this one's GME. We're starting to see a lot more movement in the underlying, which is fun. So hopefully we start to see borrow rates move. I didn't check the borrow rates this morning yet because I didn't do the daily. Not up. So Upstart's borrow rate went up a little bit today though. What's today's narrative? I don't know about narrative, but I think bulls were able to get above their short puts 43.60 in the pre-market, and they're pretty well positioned for the rest of the day to recover at least the losses from yesterday. I don't know how much new ground they'll make to the upside, but VIX is still a little elevated. I don't think we have any big news first thing this morning. We had import export in the early part of the day. Exports were up, so were imports, I think. Wait, hold on. Were they? Export prices were up. Import prices were down. Okay. Both down year over year. Harker spoke at 9. Yeah, so nothing till the Michigan consumer sentiment at 10. And that's really like our only big data today. So that's probably gonna be where we hang up here, and then if it's positive, we'll move up. Although I have a feeling that the consumer isn't as robust. It is a survey, so it may not reflect actual conditions. GM, no DD. Oh, for GME? Who the fuck cares? I didn't wake up early enough, but has GM moved in like days? It's still coming down a little bit, which is bullish. It's at like 20 right now. Ooh, pushing up a little higher. Nice. We got 20 minutes till the Michigan report. Single option. I don't like that they're blowing up so much of the chain. That was a nice bounce from Upstart and GMA. All right. 15-minute looks pretty strong. So does the 5. The 1 might have a little bit of pullback here. 18 minutes to go. Call interest picking up at 90, 95, 44.05, and 44.10. All right. Ooh, Dorcas. Nice. That's excessive. Thanks, Doric. Thoughts on Zom calls, or think oil will start to pull back again? I mean, you could try it. Zom will probably react positively. I mean, with the shit going on in the Middle East, I think there's a pretty good chance that you at least see more risk premium priced in. Have you always been one of those people who doesn't need a lot of sleep? Generally, yeah, but I do need some. I have not. The problem is lately I have not been getting some. But yeah, usually I sleep like 4 hours a night. Rad, $1 call for 1020 update. In 3 days, 5,000 more calls have accumulated. Nice. Nope, I'm out of docu. I got assigned actually last week. Yeah, I'm not picking up more shares. Not in the current macro. Lose your stops right before data drops. Probably not a terrible idea. Just contract volatility can pick up. Especially if you're like at the money or near the money. still a little bit of vol here. Although futures looks good. Kind of fighting for 4,400 right now. Is there a problem? Is the problem not that you've been getting some, if you know what I mean? Might be. You need to sleep or your T levels could drop drastically. Thank you for the warning. Thanks, Barry. Good morning to you as well. Do you have time to look at bank earnings? Yeah, I guess I could. I mean, they're obviously okay. I'm not invested in any of them. The Russell kind of still looks like a sack of shit. Hold on. Let's see. JPM. $4 a share. Beat by 9.66. Revenues beat by 0.62. So surprise to the upside. Wells Fargo. Stronger beat. Almost 20% surprise. Revenue surprised almost $1 billion to the upside. City. $32 surprise on EPS, almost 5% on revenue. Actually, City's not doing bad. I don't dislike them. BlackRock missed on revenues. 1.46 billion. Too much market exposure. And who else was there today? PNC was the other one. There's some insight into the regional banks and see how they're doing. PNC looks like they took a $85 million hit. So missed on revenues, beat on EPS. Regional banks struggling a little more with less capital to lend. And I mean, this is what I can tell you right now is that regional banks look like they're, and they probably will continue to struggle with higher rates and lower liquidity. All the GSIBs like Wells and Bank of America and Morgan Stanley and Goldman and all of them should be doing well because rates are high and they're lending aggressively, right? The problem is lending at high rates into a possible economic well, let's just say pull back for now, but we could get a recession or worse. Um, Means that they could have a high rate of default in the future because they're lending in, conditions which increase the likelihood of that happening. So, you know, and also heavily against the currency spread, right, in order to boost their net margins. So if unemployment goes up, the people who are borrowing at 7 to 7.5 are going to feel the pain much sooner than people who were borrowing back at 2 and 3%. And we know that all of this lending is newer, right? Because um their net interest income going into the beginning of this year was garbage, right? So I mean, right now you can go to any bank and they will give you a fucking loan for anything you want, right? They just want to get that as much money lent at current rates as they feasibly can. But that exposes them to a ton of default risk. My mortgage is 3.4%. Yeah, but they're also not making any money on your mortgage. What about super tiny banks? I think it depends on how their liquidity is. Some of the super tiny banks are probably pretty safe, right? Like they probably have decent cash flows and their depositors really aren't going anywhere. Um, it depends how tiny though. Yeah, you're part of the duration risk, Carl. VIX isn't really turning around yet. We probably won't see VIX crush until after the Michigan report. Have you tried to refinance the 7% mortgage? How's Fubo's tips looking? Still shitty. Russell's not doing great this morning. Like they're up, but they're way behind ES and NQ and Dow. Ooh, Dow's doing really well today. Interesting. Hmm. Checked it off resistance. All right, so in the Michigan Consumer Sentiment Report, we're going to be looking at 5-year inflation expectation is going to be important, and just the total consumer sentiment score. 5-year inflation expectation was, I believe, up on the final last report, and this is the preliminary report for October. What's the best guess on Michigan sentiment? It's random. I would say that consumers probably feel that inflation is higher. Like their 5-year inflation expectation will be elevated. Sentiment's probably down a little. Porcini lasagna or eggplant parm? Eggplant parm. Thoughts on Campbell's soup? It should be good in a recession. I already own a bunch of it. It's sometimes okay for selling covered calls on. Other times it can be really difficult to get a bid. Inflation equals higher for longer. Yep. Eggplant makes my mouth itch, but I still eat it. Should cook it more. Where did your love of eggplant parm come from? I don't know. My mom used to make it when I was little, and she learned to make it from like my dad's mom, who was from Sicily, and then I've just always liked it. I don't know. Yeah, bro, you're allergic to eggplant. Who is? Not me. It doesn't make my mouth itch. Hmm. Is your recipe better than your mom's? Yeah. As the resident New York City resident, what should I absolutely avoid on a trip there? Times Square. But you're Sicilian? I thought you were Greek. I'm just Italian and Irish and German and French. And I don't think very Greek. I possess some of the extremely diversified genetics of Western Europe. Wait for it. That sounds wait for it American. Well, no. I'm an American citizen. Half. VIX is being weird today, almost like it's not being actively shorted. Yeah, you could say that. It probably won't be actively shorted until after the data comes out. Or there's just a demand for tail risk hedging, right? Everybody has ethnicities. Just avoid New York as a whole. YouTube getting a bit glitchy with this ad blocker arms race. Gherk's turning into max headroom. Oh, okay, so sentiment's way down and inflation expectations are up. Does anyone give a shit? Probably not. Harami on rye. How long until we get an eggplant parm recipe stream? That was a nice try. Thank you so much, Harami on rye. The eggplant is only for the pontiffs. I don't know. Maybe if I quit doing this, I'll give everyone my eggplant parm recipe, and the world will be a better place. It was a Head and Shoulders, and there's nothing anyone can say to convince me otherwise. Ascending wedge. Actually, ascending triangle. I hate being too poor for the eggplant parm recipe. Make more money in the markets. You can make millions or billions. Would you give everyone your eggplant? Not you, Grim, too. You reek of desperation. I just made $50 in 40 seconds. Is this what true power feels like? Sure. Do you have any 2024 GME calls? No? Not at all. Why? Think I should get some? I don't know why I bought them with this expiration, but good riddance. Still confident in the upside. It still looks pretty good. Like the Michigan report's not great, and that's gonna create a little struggle here, but I don't think it's gonna kill off the call interest. What's your favorite Star Trek, and why is it DS9? It's definitely Next Generation, and yeah, that's it. Neither does anyone else. It would be hilarious if inflation Dixie yields, global conflict can't take the market, but the Midwest does. Seriously. The 30-year note printed with like a 14 BPS tail yesterday. And we still recovered. That wasn't that high. What was it? It was like 4.8. Eight something. No, was it 16? I think it might have been 16. 0.857 or something like that. 4.847? That's gonna make me look. $4.837. Ooh. It's the difference between spot and the like high close at the auction. So if spot on a yield is trading at like 4 point, let's say it's trading at like 4.75, and then the auction comes in at like 4.83, right? That's a 8 BPS tail. Do you cross your legs like Picard or Riker? No, I just man spread everywhere. I have a theory that whenever JFresh is violently bullish, it means they need a cat nap. Hmm. VIX is still climbing here. That's interesting. Does it matter, or do we just fill the gap? That's kind of a big gap. I don't want to fill that. Well, I guess I don't care. Hmm. Thoughts on Sava getting hammered? I don't have any. I haven't looked at the stock in like 6 months. Let's negate your move up theory. It's just a little breakdown. It's not very bad. No, I don't think so. Call interest hasn't changed substantially. If we hold 60, still pretty bullish, especially if we bounce off the top of the gap. Do you see a reason why the Bulls can perform a rescue operation today, especially into close? What do they need to rescue? We're fucking up from yesterday. There's a rescue. We're not underwater. No gap fill in the early morning here is bullish as fuck. No, yeah. If we don't fill it, it is. Did Rod halt or literally just trade flat for 15 minutes? I don't know. No, I think it just didn't trade for 15 minutes. What the fuck is going on there? Hold on. Well, there was a volume. It just didn't do anything. Rad's doing weird shit. They released some kind of earnings, I think. Yields are still going down. Dollar's up a little. VIX futures climbing still. VIX still climbing. That part's kind of interesting, right? Hmm. How's ES looking? Rejected at 4405. Support? Where's there going to be support? 78 or 85. Maybe 90. Although I don't think that's been a support level previously. Well, it was once. Although a weak one. Dixie's back on trend. Correlations still turning up for today. That's ridiculous. Yields are coming down. Interesting. God, I love bankrupt stocks. Rescuing Tesla and Meta, which are all down below yesterday's lows. I mean, I think they'd be better served pumping the breath than the Mag 7. Isn't Nasdaq kind of underperforming today? Yeah, Nasdaq's down today. PNC starting to recover after its drop. So Cities looks good. Yeah, we might fill the gap. Hold on. 60-50. Bounce. Net delta. That's kind of starting to turn around though. Maybe we'll get like an out of the money put. Ugh. I thought we're mooning today. What gives? Not mooning, but 43.75. Maybe a test of 4,400. Was the verbiage mooning used anywhere? I said 43.75 was a conservative target for today. I think the upside of my projection's only 4,400. Do you foresee another leg down below 4,200 during or after SLD? I'm trying to get some slightly out of the money puts for 11.17, but I'm waiting till we cross 43.80 again. Thanks. Um, Getting to 4,200 will probably take some time, but we could. I think after the October expiration, a lot of the positive delta is going to fall off the chain. DN at 43.73? Yes. You're doing a disservice to the audience if you fail to identify the massive bearish resistance cannon hidden in the bunker that is 43.85. There's no bearish resistance at 43.85. I sold some already. I guess I could sell more. I figured I'd wait and see if we fill the gap. I thought we were 4,400 today. What happened? Okay, who said 4,400 today? We can still do it, but who said that? Kirk said conservative upside target 43.75. Shorted from there, made 80% on the data. How could you do this to me? Get fucking wrecked, nerd. I applied to be JFresh's boss. Wish me luck. You should have just gotten a PhD in economics. Your high-low range is 4,300, 4,400. Are you talking about this? This cone? This is what the market maker's pricing in. I'm not the MM. Also, we're still inside that range. "50 minutes into the day and everyone thinks they've picked the fucking direction. Jesus Christ." SPX $20 on all $20 drop. All of chat. This is unfathomable. The pickle jars always had a hard time understanding that price doesn't generally move in one direction all the time. And so it's very confusing when anything happens that moves the price temporarily in another direction. Yes, it does. It goes to the right. And if it stops doing that, that's a reason to freak out. How do you stop yourself from buying in every reversal that you see? There hasn't been a reversal yet, so that helps. Straddle 100% of the time. Straddles are, in fact, the best. Oh, MOASS down crime. Yeah. Oh, interesting. Then I should get ready for that, Dork. How do I stop myself from entering the market before a clear pattern is established? Paper trade and practice identifying clear patterns. We got some consolidation here. There's still a little more room to move down. Let's see, do we see any put accumulation coming in? Not a ton. Puts being sold. Where at? 55? They're not going to want to lose 60 for too long. They still have short puts there. They definitely don't want to lose 50. What in the fuck is happening with Rite Aid? Rad delaying the 10Q is super bullish, right? Not at all. But if they're delaying their 10Q to announce that they got funding to reconsolidate their debt from Bank of America, woo boy, right? There was a /S I saw. /S for Sirius. That's not bullish for Bank of America. What, lending out $3 billion at 8%? That's amazing. They could probably even get a higher rate. Where's the DD on RAD for paper trading purposes? There isn't any. My total exposure is like $300. I'm not fucking writing DD on it. Did you know stocks like literally give you money every month just to hold it? Yeah, that's called a dividend. I own a bunch of stocks that do that. It's all right. It's worse than covered calls. Not filing a 10Q? Oh, look, another deficient penny stock that hits my list again. Hey, I got you. No worries. I'll throw a few K at it once it peaks. That's the way, Lawrence. Give us access to the secret DDS and RAD DD. That's not a real thing. There's no secret RAD DD. Man, if we fucking recover here, that's gonna be bullish as fuck. I wonder if they're still selling the 4360. BS finding support higher on the trend. I don't know how I feel about this. The double bottom breakout on ES failed. Well, I guess I could consolidate and test 4416. We'll see. There's probably some very angry bears right now. Tesla's not doing so hot. It's had a non-stop stream of negative press for like for like 2 weeks. 3 weeks? How come the Bobby shareholders haven't come to brag about their winnings? Oh, there aren't any. Are bond vigilantes in the room with us right now? That's not a thing. Where are you getting that from? Good morning, Verax. Why is Rad dead? I don't know what the fuck's going on with it. It's doing weird shit. I want to say it's not trading any volume, but it is. Uh, Wait, how do you choose the strike though? Oh God, that's the worst. Well, that didn't fucking work at all. All right. Someone trying pretty hard to stop this momentum on ES at 92. I mean, there's a resistance at 4,400. There's some sellers on the way up. Oil's breaking out again. All right. Someone trying pretty hard to stop the momentum. Is this a breakout or a fake out till we make out? $5 drop in 1 minute sounds completely normal. Yeah. Tesla earnings are next week. Yep. Any other big earnings next week? It could possibly drop Tesla below 220 by end of next week. Yeah, Tesla could get wrecked at earnings, especially if they're worse than their last earnings, which they probably are. Rad had less volume than GME, which takes some effort these days. Bouncing before a gap fill is bullish AF, right? If we don't fill the gap, it's quite bullish, yeah. I'm now the proud owner of a single rad November 17 $1 call I'm diamond handing it for nothing less than 10,000%. Win 43.75. I think you missed it already. Chop, chop, chop. Ah, it still looks pretty good. A little more consolidation. Let me see how call positioning looks. It still looks strong. Call interest is starting to pick up. Put interest is also picking up. That's kind of fun. What's the daily looking like here? It's crossover day. Oh, Dork, we forgot to celebrate crossover day. Today's day 6. DMs, 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 DMs. Hedge funds will not be forced to reveal the names of stocks that they are shorting. The SEC will officially announce this later today, including derivatives and swaps. SEC would then aggregate all the data before publishing it. Ooh. Hmm. But not the amount they're shorting, right? It's live right now.
Help to ensure that our country's working families are never again placed in the unfair position of having to bail out firms that took excessive and irresponsible financial risks. In the Dodd-Frank Act, a groundbreaking law that has strengthened financial stability and protected consumers, Congress directed the Commission to address vulnerabilities in the securities lending market. A specific provision of this law directed the Commission to issue rules that increase the transparency of securities lending information available to brokers, dealers, and investors. At the direction of Congress, the Commission is adopting a new rule designed to fill a gap in the financial data available to borrowers and lenders on securities loans. Due to the absence of centralized reporting, regulators must estimate the size and scope of the securities lending market from surveys and not from direct hard data. Today's rule will yield high-quality data to the Commission that will enhance our ability to assess and monitor systemic risk. The new rule will help investors and enhance market efficiency by reducing borrowing costs, increasing price transparency, and promoting competition. Investors and other market participants will now have access to material information about securities loans by the next business day. This should help level the playing field between borrowers and lenders in this market. I am pleased to support the adoption of this final rule and thank Commission staff for their hard work and for meeting another important Dodd-Frank Act milestone. Thank you.
Thank you, Commissioners. I know we're probably not going to get your support, Commissioner Peirce, but in background, I did go back and look at your paper from 2014 that you wrote about the untold story of AIG, and you thought that there was too much focus on derivatives. In fact, you even footnoted that you thought I, as chair of the CFTC, was focusing too much on credit default swaps in the untold story of the collapse of AIG. So I think you and I probably share a view that AIG was about more than credit default swaps. And I just wanted to correct the record from that long ago paper that you thought I was too focused on credit default swaps. But here we are today, also focused on securities lending. Now, I want to, for the listening public, fairly note that Commissioner Peirce 9 years ago was not a commissioner and was writing as a private citizen and academic, but was also writing that there was risk management failures, and the core story of AIG was about risk management failures. But I do want to note that I do think that AIG was risk management failures, securities lending, and credit default swaps.
Well, I'm glad you brought that up, and I figured that that was probably the case. So it's good to hear you point that out, and I think that highlights why this is such an important area for us to get better data.
Chair Gensler, if you don't mind, I know three of you have talked about AIG. I did not have any involvement, even though I was at the SEC with AIG, but I just had a question for the staff based on that discussion. Is, given this rule, had this rule been in place in 2008, what would the SEC done to prevent AIG from, or at least AIG financial products from essentially imploding? Would this have, if this rule had been in place, would it provided assurances that what happened with AIG would not have happened?
Well, Commissioner Ueda, this is a good question. It's very hard to speculate on parallel universe, but I would say that what happened, if I recall correctly, in the AIG situation, AIG lent out its own securities and used the cash collateral to speculate on highly risky securities and endured, heavy losses. I think that's more than $20 billion, if I recall correctly. So in that situation, if this regime were in place, the market would be able to see there is a massive lending activity out there. Now the market will not be able to see who they are, but the regulators will be able to see that. I think that would be extremely helpful for regulators to oversee the market and also really sound the alarm bell if there's any problem. So I do think that would be helpful. Now, whether it's gonna completely prevent it is hard to say.
And is, so by implication, is it that our staff would be reviewing this almost real time, because we would be getting this data on a daily basis, and that they would see the amount of lending activity, and they would be able to determine that that was abnormally risky?
Well, AIG was an insurance company, so I don't want to speculate on the jurisdiction issue, but I think in terms of the market oversight, it will be helpful. Exactly how we're going to do it, I dare not to speculate. Again, this is 50 years ago.
Okay, well, no, I appreciate that, and I agree with you. We're not in the meta universe, at least not yet, where we've got all these different parallels. But I think it's an important question as to, if we're going to ask for this data, how exactly is it going to be used? How does it prompt a response that would potentially mitigate some of the risks that I think is intended to be addressed by this? So anyway, thank you for that, those answers.
Yeah.
I'm
sorry, Commissioner Peirce.
No, I was just going to say, I think you raise an important point, Commissioner Ueda, and one of the key facts, which Chair Gensler just mentioned, is that there was, when there are broader risk management issues, even knowing this kind of securities lending data would only get you part of the picture, because it fit within the broader context of what was going on at AIG. So I think you correctly raised that issue, Commissioner Ueda.
Yeah, and I share that. I mean, broader risk management failures Transparency can only do its part, but broader risk management is often at the core of some of these failures in the capital markets. But I support this rule. I think it's a really important rule for transparency, to promoting efficiency. Transaction reporting has gone on in the cash markets for quite some time, derivatives markets more recently. This would be in the lending market. I think the appropriate adjustments to doing it daily rather than the 15 minutes, and then the delayed 20-day later delay for some of the details publicly, but regulators would have that information more promptly. It's really an important piece of this opaque market. But with that, how do commissioners vote?
No.
Yes.
No.
Yes.
Yes, the ayes being 3-2, the matter passes and it will be sent on to the Federal Register. I tried with quoting your paper from 9 years ago.
You
Didn't
just
quite
brought
make
back bad memories, so.
it. What is it? You know, it's a long paper, by the way. With that, I'm turning to the second rule that we're considering today, as I mentioned earlier, is with regard to short sale. This too is a mandate that Congress had put forward for this agency as in the aftermath of the financial crisis. I too am supporting. Before we turn it over to again to Hashang and his colleagues, just giving you a little flavor of it again is, so what did Congress do after the financial crisis? They directed the SEC to enhance transparency of short selling of equity securities. Now, in particular, Dodd-Frank included a new a part of the Exchange Act. You'll hear reference to something called 13F2. That's the actual provision that they inserted, a new provision which mandated that the SEC write rules for institutional investment managers, so a group called institutional investment managers, to disclose their short selling related data. Congress did so even though the Financial Industry Regulatory Authority, the FINRA that we were talking about earlier, already had been making some disclosures with regard to short sale transactions. Now, Congress put it in a section called 13F. A little bit about that section 13F. Since 1978, so 45 years, investment managers, you'll recognize that term, have had to report their long positions quarterly on so-called 13F filings. That's where you can go and members of the public can see on a quarterly basis what holdings investment managers have, their long positions. So when Congress, in adopting Dodd-Frank, mandated the SEC write rules with regard to the short selling, meaning when they sell something short rather than going long, they actually put it in that same section in 13F and created a new 13F2. Congress, however, said that such reporting of short selling should be done at a minimum monthly. Today, I'm pleased that based upon public comment, we're adopting a rule fulfilling that congressional mandate. It will improve transparency to the public and the Commission oversight into short selling activity. Now, in fulfilling Congress's mandate, today's adoption will promote greater transparency about short selling, both to regulators and to the public. Investment managers will report to the Commission, and then an aggregated, anonymized version of that information will be disclosed to the public. Investment managers that carry large short positions in equity securities, think about stocks, basically, but large short positions in equity securities will be required within 2 weeks after each month to report those positions and related short sale activity to the Commission. The threshold for reporting was set, so there's a threshold that will be set that an investment manager's short positions in a particular equity security of reporting for each of those issuers is at least $10 million or the equivalent of 2.5% or more of the total shares outstanding averaged over that month. So the smallest short positions would be out, but if you met one of these two thresholds, there's separate threshold that's in the release for short positions of equity securities of non-reporting issuers, and that's a smaller number in the release. Based upon the public feedback, we made a number of changes. One of the things was on these
Is this
thresholds, the
bullish?
$10
Are
million
they just past
threshold is based
short
on the
reporting?
average during the month rather
Probably
than on
not.
any given settlement day. Further, the investment managers would not
Although,
have to give the commission
it could lead to
as much
share recalls,
detail
too.
as proposed regarding their daily short activity. Now, based on those filings that the commission would get, then the commission would make public within 4 weeks after the end of each month, aggregated, anonymized data about the gross end of month large short positions. The commission also will publish the net aggregated daily activity for each settlement date, each day of the month, trading days in that month, technically settlement days. I think this rule addresses Congress's mandate and improves upon existing sources of short sale related data in the equity markets. First, the rule is applicable to institutional investment managers, not just to FINRA broker-dealers members. So I'm comparing this to some of the data that FINRA currently puts out. This, as Congress mandated, would be applicable to institutional investment managers, and again, not just FINRA broker-dealers. Second, the short sale data publicly disclosed on an aggregated basis will include the daily net activity on each settlement date during that prior calendar month. So at the end of kind of February, you'd get the information for January. But it would include what happened on a daily net basis. Such information, again, is not currently available in the FINRA data or from the exchanges. And third, it will disclose by category the directional short selling by managers as well as market makers and liquidity providers. Now, so it fulfills the congressional mandate, but I also think it leans into having a greater transparency in the three ways I just mentioned. One, very specifically, that Congress said it had to cover institutional investment managers. The final rules also address one of 4 areas that was identified when the commission staff in the report on equity and options market structure conditions in early 2021. Now that's a mouthful. That report is often known as the GameStop report, but this was one of the 4 areas that staff had said might be worth further consideration about transparency in short sale disclosure. So not only do we have a congressional mandate that's now 13 years, one would say old, enough to become a teenager, but also this was something that staff raised out of the GameStop report and the events in early 2021 about the transparency in the short sale markets. Given past market events, I think it's important that the commission and the public know more about short sale activity in the equity markets, especially in times of stress and volatility. I want to thank remarkable work again of all 6 divisions, trading and markets, of course, economic and risk analysis, exams, enforcement, investment management, corporation finance, but also our Office of General Counsel, Office of Secretary, Edgar Business Office, and I will list all those names on our website. With that, I'm going to turn it over to Hashang. I think Mick Riley will give the staff a statement, and then Chief Economist Jessica Wachter again. Over to you, Hashang.
Right. Good morning, Chair Gensler and Commissioners Peirce, Crenshaw, Ueda, and Lizarraga. Today, the Division of Trading Markets recommends that the Commission adopt the new Exchange Act Rule 13F-2 and related Form SHO to provide greater transparency of short sale related data to investors and other market participants through the publication of a certain aggregated short position and short activity data. Section 929X of the Dodd-Frank Act requires that the Commission prescribe rules to make certain short sale data publicly available no less frequently than monthly. We recommend
we're
that the
gonna
Commission
need that
adopt Rule
data.
13F2 to require institutional
fun.
investment managers who meet certain prescribed reporting thresholds to file with the Commission a monthly report of specified short position and daily activity data for equity securities on a delayed basis using Form Show. The Commission would then publish
I don't think there's an
on a
option
monthly
today,
and also
Adam.
delayed basis through EDGAR certain aggregate short sale information regarding each equity security reported by managers on Form Show. In addition, we recommend amending the National Market System Plan governing the Consolidated Audit Trail, or the CAT, to require CAT reporting firms to indicate whether an order in the short sale effected in connection with a bona fide market making activity for which the bona fide market making exception in Rule 203 of Reg Show is claimed. Before concluding, I'd like to thank the many market participants who submitted comment letters and met with us in the rulemaking process. Your engagement has improved today's adopting release. My gratitude also goes to the Trading and Market Rulemaking team, led by Mick Riley, for their extremely thoughtful and diligent work. Finally, I'd like to thank our colleagues in the Division of Economic Risk Analysis, the Office of General Counsel, the Division of Investment Management, the Division of Corporation Finance, the Division of Enforcement, the Division of Examinations, EDGAR Business Office, and the Office of Secretary for their invaluable input on today's release. I will now turn this over to Mick, who will discuss the adoption release in more detail. Thank you.
Thank you, Sean. Good morning, Chair Gensler and Commissioners. The Division recommends that the Commission adopt New Exchange Act Rule 13F2 and related Form SHO to provide greater transparency through the publication of short sale related data to investors and other market participants. Rule 13F2 will require institutional investment managers that meet prescribed
bulls
reporting thresholds
stabilize
to
it
report
here
to
and
the
move
Commission
up at some point?
via EDGAR on a monthly
Well, their
basis
short puts are
certain short
underwater.
position data and short activity data for certain
Calls
equity
are still
securities.
there, but
The
stronger
Commission would
above
then publish via
4350.
EDGAR certain information regarding the reported equity securities.
We'll see. Big
First, under the rule, a
put
reporting
position
manager
coming
would be
in with
required
this
to
meeting.
report on new Form SHO certain basic information, including the manager's name, mailing address, and business telephone, as well as the name and contact information for the manager's contact employee for the Form Show report. With regard to each individual equity security reported on by managers in the information tables of Form SHO, managers would be required to report the issuer's name and LEI, if it has one, and the equity security's title of class, CUSIP, and Financial Instrument Global Identifier, or FIGI, if any has been assigned. Second, the manager will be required to report information about its position in the reported equity security on two information tables. On Information Table 1 of Form SHO, the manager will be required to report the number of shares of the reported equity security that represent the manager's gross short position in that equity security at the close of the last settlement date of the calendar month reporting period, as well as the corresponding US dollar value of their reported gross short position. For purposes of Rule 13F2 in Form SHO reports, the term gross short position would mean the number of shares of the equity security for which information is being reported that are held short without inclusion of any offsetting positions, or in other words, without offsetting, for example, shares of the reported equity security or derivatives of the equity security. On Information Table 2 of Form Show, for each reported equity security and for each individual settlement date during the calendar month reporting period, a manager will be required to report net activity in the equity security. Activity to be considered by the manager would include, for example, the acquisition or sale of shares of the equity security resulting from call options or put options exercises or assignments. The net activity reported by the manager would be expressed by a single identified number of shares of the reported equity security and would reflect offsetting purchase and sale activity by the manager. Under Rule 13F2, managers will be required to report such information for each equity security if one of the following reporting thresholds is met. So with respect to an equity security that is of a class of securities that is registered pursuant to Exchange Act Section 12, or for which the issuer of that class of securities is required to file reports pursuant to Exchange Act Section 15D, which I'll refer to as a reporting company or issuer, in which the manager meets or exceeds either 1, a monthly average gross short position at the close of regular trading hours in the equity security with a US dollar value of $10 million or more, or a monthly average gross short position at the close of regular trading hours as a percentage of shares outstanding in the equity security of 2.5% or more. With respect to an equity security that is of a class of securities of an issuer that is not a reporting company or issuer, as described just now, in which the manager meets or exceeds a gross short position in the equity security with a US dollar value of $500,000 or more at the close of regular trading hours on any settlement date during the calendar month. The Commission would then expect to publish via EDGAR certain information derived from Form SHO reports within 1 month after the end of the reporting calendar month. For Information Table 1 of Form SHO, the Commission would publish as an aggregated number of shares across all reporting managers the number of shares of the reported equity security that represent the manager's gross short position, managers being across all reporting managers, gross short position at the close of the last settlement date of the calendar month, as well as the corresponding US dollar value of this reported gross short position. For Information Table 2 of Form SHO, for each reported equity security for each individual settlement date during the calendar month, the Commission would publish the net activity in the reported equity security as aggregated across all reporting managers. In addition, to supplement the short sale data available to regulators, the Division recommends that the Commission adopt, as proposed, the amendment to the National Market System Plan governing the Consolidated Audit Trail, or the CAT-NMS plan, that would require CAT reporting firms to report whether an original receipt or origination of an order to sell an equity security is a short sale for which a market maker is claiming the bona fide market making exception to the locate requirement in Rule 203(b)(2)(3) of Regulation SHO. The Division recommends a compliance date for Rule 13F2 and for Form SHO that is 12 months after the effective date of the adopting release, and a compliance date for the amendment to the CAT-NMS plan that is 18 months after the effective date of the adopting release. The Commission would begin publishing the aggregated short sale related data collected pursuant to Rule 13F2 and Form SHO 3 months after the compliance date for the Rule 13F2 and Form SHO. Thank you for considering our recommendations. We are happy to answer any questions you may have. Now I will turn it over to Jessica Wachter, the Director and Chief Economist of the Division of Economic and Risk Analysis, to discuss the economic impact of the rule and the amendment.
Thank you, Mick. Chair Gensler and Commissioners, as you've heard, today the Commission is considering adopting Rule 13F2 and related Form SHO to implement the statutory mandate of Section 929X of the Dodd-Frank Act. This rule will provide additional transparency to investors regarding short sale positions and short sale activity. Additionally, as you've heard, the Commission is considering adopting an amendment to the NMS plan governing the Consolidated Audit Trail. In a short sale, an investor borrows and then sells an asset. Thus, short sales provide a means of selling an asset without owning an asset. Investors short sell assets to speculate on a price decline and to hedge an existing position, among other reasons. Under Rule 13F2, managers that meet or exceed a monthly average gross short position of 10 million or 2.5% of shares outstanding for reported company issuers would be required to report on a monthly basis using Form SHO end-of-month gross short positions and daily changes in net short positions for the equities for which they cross the threshold. There's also, for non-reported company issuers for which the information of shares outstanding might not be available, there's a dollar threshold, as you've heard, of 500,000. So that's the reporting for managers. And after this reporting, the Commission would publish aggregated and anonymized versions of this data with a delay. The CAT amendment, so that's the second part of the adopting release, would require a mark on short sales that would only be visible to regulators. It would pertain to whether a broker-dealer is operating under an exemption to current short-selling regulations. Marking short sales as subject to this exception would provide the Commission with a better understanding of how this exception is being used in the marketplace. We expect that Rule 13F2, related form show, and the CAT amendment would enhance regulators and the public's understanding of market events and their relation to significant short-selling behavior. Publishing aggregate information about activity and positions of large short sellers has both benefits and costs. Benefits in terms of greater
We're
information
down
on large
75
short sellers
basis points
available
in
to all
30 minutes.
investors,
What
but
gives?
costs in that those same
Gary
investors
Gensler
may
is trying
use
to
the
crash the
information in ways
market.
that decrease the profitability of certain short-selling strategies. Rule 13F2 would result in the dissemination of aggregated information subject to a delay, thereby trading off these costs and benefits. In addition, the rule and amendment would have direct compliance costs, which we would believe would be limited due to the thresholds required for reporting. In closing, I thank our colleagues from the Division of Trading and Markets, the Office of the General Counsel, and the Division of Investment Management, and others for their collaboration, and thank you for your attention.
Thank you, Jessica, Mick, and Hao-Shang. Commissioner Peirce.
Thank you, Mr. Chair, and thanks to Jessica, Mick, and Hao-Shang. In 2010, Congress directed the Commission to prescribe rules providing for the public disclosure of aggregate short sale position data on at least a monthly basis. The final rule that we're considering today, however, goes well beyond what Congress requires. Because a narrower rule leveraging existing reporting requirements could have brought more meaningful transparency at lower costs, I cannot support this recommendation. Enhancing the quality and quantity of short sale information available in the market can be beneficial and is something I support. The issue with this rule is that it does not adequately consider all the costs associated with the implementation of the rule. The costs are not merely the operational and financial costs to providers of information, but also the potential cost to market quality. Short selling is important to the healthy functioning of our markets. It allows investors to hedge risks. It enables market participants to be compensated for their vigilance in spotting negative behavior in the markets, including wrongdoing by issuers, and it allows market makers to hedge their positions so they can provide consistent liquidity to investors. Increasing transparency of short selling activity can help investors better understand market sentiment, but it also can raise the cost for market participants to engage in short selling in the first place. The result could be bad for markets on hedge risks, more fraud, and less liquidity. The final rule requires institutional investment managers who exceed at least one of the rule's thresholds for short positions in a particular security in the preceding month to file new Form Show. That form consists of basic information about the reporting entity, and it has two tables. Table 1 requires for each security where the manager's short position exceeded the relevant threshold that the manager report the end of month gross short positions in both number of shares and dollar amount. On Table 2, for each security reported on Table 1, the manager must report the net change in its short position for each trading day of the month. Managers will be required to file Form Show within 14 days of the end of the calendar month, after which the Commission will aggregate and publish the data generally by the end of the month in which it received the data. The statutory mandate, which requires periodic but not daily aggregate reporting, appears to reflect Congress' attempt to strike an appropriate balance. The information required by Table 1 satisfies the congressional mandate. The statute doesn't require the Table 2 information. Indeed, even though an earlier version of the legislation required daily reports on short sales to the Commission, the statute as enacted does not mention daily short sale information. The Commission could have chosen a less burdensome
Momentum
approach.
shifting
Commission
just
and
a little
self-regulatory
bit.
organization rules
Not enough
already
to say
require
it's going to
market
bounce.
participants to report information related to short sales and short positions. The Commission could have taken an approach that
I'm gonna get
leveraged
fucked
or
here. My fucking
consolidated
put
those
hedge is at
existing
43.30.
reporting requirements in a way that reduced or eliminated the costs of duplicative and potentially confusing reporting of similar data. FINRA collects aggregate short interest information in individual securities on a bi-monthly basis from broker-dealers. The relevant listing exchange, or FINRA, publishes the data with a 2-week lag. As suggested by commenters, the Commission could have built on this system by requiring weekly reporting to FINRA and shortening the dissemination lag to 1 week. This approach would have provided timelier information to the public than the rule we're adopting today. The information might have been more reliable. This might have been an easier rule to implement, and it could have been enhanced. The information that FINRA collects could have been enhanced to provide additional information to the market. The release is too cavalier in its treatment of the risks attendant from capturing detailed daily short sale related data at the manager level. The information to be reported, particularly as related to daily net changes in a manager's short positions, is highly sensitive. As one commenter explained, small daily fluctuations do not have significant regulatory value, but their disclosure exposes us to unlimited risk of commercial harm. Exposure of this data could lead to retaliation and the compromise of valuable proprietary trading strategies. The Commission doesn't currently intend for these data to see the light of day, but the intention offers little comfort to managers. Exposure could come through a breach of EDGAR. After all, we're increasing the value of information reported to EDGAR, which only makes it more attractive to hackers, who will then be willing to invest more money and effort into gaining access to the database. Exposure also could come through a change of heart. The recommendation before us reflects a prudent determination not to publicly disseminate non-aggregated manager-level data, either on an anonymous or on an attributed basis. But once we start collecting these data, it will be extraordinarily easy for the Commission just to flip the switch to disseminate this information to the public. And there will be temptation and political pressure to do so, especially if we have a significant market event. Proponents would then argue that there would be no additional cost to market participants of doing so. There would, of course, be a cost in doing so, but it could be very difficult for the Commission to make that argument at that point. The Commission's feeble rationale for including Table 2 in Form Show was that excluding it would not further the goal of enhancing the transparency of short sale related data. That rationale could easily be used to justify the publication of the data. Although I can't support today's rulemaking, I do appreciate that it
Can't
reflects
they hack the hedge
staff's
funds
efforts
now?
to address a number
Hard.
of concerns raised during the
Probably
comment
a lot
period.
harder than
I
hacking
appreciate the
Edgar.
work on addressing those concerns. Many thanks to the Division of Trading and Markets, the Division of Economic and Risk Analysis, and the Office of General Counsel, as well as other offices throughout the Commission. I enjoyed our discussions about the rule and look forward to working with you during implementation.
No, short
do have
puts
a few
haven't
questions.
capitulated. The 50s and
Why?
60s are still
So
in
we could have adjusted existing
Some of the out-of-the-money call
um,
positioning started to
short
capitulate,
selling
but there's still a
reporting
decent
regimes.
amount up
So
to 40,
why? And then we
like
could have made it
43.75.
more frequent than it is now. Why is daily
problem
data
is there's
publicly
a lot
disseminated
more
a month or
puts.
more
I'm just
after
not sure
short
if they're
sale positions
sold.
are opened or covered more useful to investors than weekly data disseminated with a 1 week lag, which is what we could have gotten if we had worked on an enhancement to FINRA's rules?
Thank you, Commissioner Purse, for that question. I believe you refer to the FINRA rule that require broker-dealers to submit weekly data. I know they published a notice of comments, but currently it's bi-weekly data. I would just note one key difference here is that the FINRA rule is really about the broker-dealers, right? The entry point is really only about broker-dealers that are FINRA members, whereas today's final adoption of 13F2 will be broader. Institutional investment managers cover broker-dealers, but they also cover investment companies, they also cover pensions, they also cover insurance companies and many other entities. So the overlap there is small, and they do not, I mean, the FINRA rule is not really a substitute of today's final adoption. I also want to invite Mick Riley to chime in. There are other differences. Mick?
Yes, thanks, Commissioner. So to echo Ms. Sean's comments, it's a different universe of reporters. The difference here, I think you've already pointed out in your statement, was the information on Information Table 2 that would be reported to the Commission, which is the activity data, which is not currently available. I think that's, as we talked about in both the proposing release and the adopting release, that's a supplement to the information that is currently available out there via FINRA and the exchanges. The information there, as we discussed in the adopting release, we believe would help the Commission to assess risk. It would help the Commission to be able to recreate market events, unusual market events that do occur. And as you alluded to in your statement earlier, short selling, we recognize short selling, the benefits of short selling to the market generally in terms of the price discovery, and the rule's been designed to for that delay in terms of any reporting of the public, and any of the information that is reported to the public would be aggregated as discussed in the adopting.
Yeah, I appreciate those answers. I just think we could have gotten more bang for our buck if we had worked with the existing reporting regime, expanding it in ways that we needed to, and maybe speeding up the collection and the dissemination. I think that could have been helpful. And then in terms of the data that we're collecting for our own purposes, I do think this ties back to something that Commissioner Ueda asked with respect to the last rulemaking, which is, what are we planning to do with the data when we get it? What would we do if we saw a particular manager with a particular particularly large short position, for example? It's not our job to risk manage hedge funds or other short sellers. That's their own job. And so, this is an area where I think we shouldn't be collecting data unless we have a really clear use for it. Speaking, I guess, of bang for the buck, what do we anticipate the compliance costs will be in the first year, and then in each subsequent year after implementation? And what, if anything, can we do to contain these costs?
So I'm happy to talk about the compliance costs. So in the initial costs are estimated, and actually this is as we talk about in the release, this is a estimated upper bound, so they're likely to be lower. Initial costs would be about 120 million, and aggregated, and ongoing annual costs would be 70 million. So those are, as you mentioned, estimates. They're also most likely upper bounds.
And so because they are upper bounds, that suggests that we can
and I'm sorry, let me just say that's that is actually the total cost. Please go on.
So it sounds like we can play a part in making sure that the costs stay well below that upper bound. And I don't know if this is a question for you, Jessica, or for trading and markets, but what are our plans for working during implementation to keep the costs down while still making sure that we get the information that the rule requires?
I'll start, which is, so this rule does require reporting through the Edgar system. We believe that most of the entities are familiar with the Edgar system, and that is a cost mitigant here.
Yeah, that's helpful. I guess I'm just thinking in terms of you laid out the upper bounds in the rule, and so I assume that those estimates take into account the fact that we're using Edgar, which a lot of filers will be familiar with. Are there other things that maybe trading and markets is thinking about doing during the implementation process to aid in the process? This rule too has a pretty short compliance timeline. So what is the plan for trading and markets to work on facilitating implementation of this rule?
Commissioner Peirce, I'm happy to chime in here too. You mentioned the compliance date. I just want to note that for this one, there is no SRO kind of FINRA involvement in the process, because
a bit of profit taking on what?
Through Edgar. So even though the headline implementation time is a little shorter.
Is this going to force hedge funds to wind down some over-leveraged short positions so they don't have to report them? Possibly. I don't know if there'll be any reporting for synthetic instruments, though. Options, maybe.
The universe of reporters would be institutional asset managers,
ETFs, I don't think this affects.
This is
or
a
at
well-defined
least
universe.
so far, I haven't heard
understand
any
who they are,
verbiage
and they already
that would
have
indicate
places
that
and
authorized
procedures in place to
participants
report
would
the
be
long position.
exposed.
And I think here we are simply adding on the short positions. That is significant enough. Trading market staff will continue to work with the market participants, and if there's any issue, our door is always open. Please do talk with us and flag any issues we see. It's hard to speculate exactly what issue people may have, but Commissioner, we certainly do want to and will continue to work with the market participants to make sure that there is a smooth transition of reporting.
Thanks. And I think with any rule, there are always issues that we don't anticipate. And so that's exactly right. Having our door open, making sure that people feel free to come in and raise those issues with us, I think is really important. Have we taken into account the cost of requiring managers to daily monitor their positions? As one commenter explained, that the managers' reporting systems generally are not equipped to monitor short positions and related transactions that affect those positions on a daily basis.
So I'm happy to take this question. So we are grateful for comments, and in this case, so those costs are taken into account, but we would note that for short positions in reporting companies, those we now have a monthly threshold and a change from the proposing release. So in fact, you wouldn't need to monitor on a daily, the reporting system would not need to monitor on a daily basis.
So how does that work then? Because there is a requirement to show the net changes, right? Has that changed such that you don't have to monitor that?
Well, so there is, for Table 2, as you point out, a requirement to show the net changes, the activity on a daily basis. However, for the purpose of determining whether you are going to be subject to the reporting, you don't need to monitor. And of course, that reporting is then, it's end of month to the commission.
Yeah, I do think that's a helpful part of the rule, but I guess I'm in a helpful change, but I guess I'm still trying to figure out how a manager could avoid monitoring daily since it will need to report those net changes.
I think that the distinction here is whether the technology is available in terms of determining whether you pass a threshold and therefore have to report versus whether the entity has the data available somewhere in their system should they need to actually report the data at month's end.
I see. So if you find out at month's end that you passed the threshold, you'll have to go back and do some work, but you don't necessarily have to do that work every day.
Yes.
Okay. How important were data generated under temporary interim rule 10A32, which is the rule that the commission adopted in October 2008 to the fashioning of the final rule here? And are we concerned that relying on data from that unusual time period 15 years ago is maybe not representative and so therefore problematic?
Right. So as you mentioned, some of the data used come from the temporary rule adopted in October 2008. That's where we get some of our counts, and that data, that's our only existing data source. And so it's important for that reason. I think it provides an important source of information on the numbers that may come in under
the short
this,
puts at 44
under this rule.
4350 and
we do caveat
40
the number
and
the
4360
reported
are all still
numbers
there
in the release due to the concerns that you mentioned. So I mean that is a concern that we consider, but I also think that the data is not something we should ignore.
And so is there a plan
to
approve
this rule,
relook at the thresholds after we have more data
deal.
based on this rule?
Well, so we are always interested in how our rules are implemented and what their effects are after they're implemented. And so we are definitely looking forward to the working with the Division of Trading and Markets to look at what the effect of this rule will be. So I'm sure there will be lots of work done on the effect of this rule.
Okay, that's good to hear. And I think we should be looking at whether we got the thresholds correct and whether those remain correct over time. That I think will be important. One of the points that you mentioned, Jessica, is that managers will be filing on Edgar, which many of them are familiar with. There is a concern that a number of commenters raised, and I don't know that this is probably more of a question for trading and markets. what can we do to give confidence to people who are filing on Edgar that their information will be safe, and given the concerns around
This whole week
the
was
really deep
de-risking.
concerns around confidentiality, are we sure that Edgar is the right system for collecting the data?
I'm happy to start here. So we do the Edgar being the right system. I do think the fact that many of those who will be reporting are familiar with it, that's a cost mitigant here.
Is people going to vote on this
And
rule
as
right
we
now?
say in
Yeah.
the release, while no technology system is impervious, the commission employs an array
there
of
short
actions
puts,
to
zero
safeguard and protect the
DTs? Yeah, a lot of them
confidentiality and
were sold
security of all
yesterday.
information on Edgar, as it does with other data sets.
The bigger ones,
Yeah, I
the
certainly
bigger
appreciate
piles
that,
at like
and I
50
know
and
that we work
25 are
really
sold
hard
out
on
the
that.
20th.
We are pouring a lot of information now, new information
But
now into
30,
Edgar,
30,
and
40,
as well
well,
as
40 and 60 are sold for
there's
today.
an ongoing project to modernize Edgar, and so it is an area that we need to really be vigilant about. Will managers have to report with respect to foreign equity securities and foreign issuers, even though such issuers have limited U.S. jurisdictional ties, and in many cases are subject to another short sale reporting regime in their home jurisdiction?
Thank you, Commissioner. Short answer, yes. So the relevant domestic conduct is just being a manager and being subject to operating in the U.S. securities market, such that they're subject to reporting as managers.
How much longer are these morons scheduled to blabber
is
for?
intended
I have
further the
calls
goal of
that
transparency
need SPX.
regarding short
These
selling by
monkeys are
managers
clearly
of
on the
equity securities
payroll, so the
generally,
rule won't
to
pass.
meet the Dodd-Frank
Rocket ship,
mandate.
once this bullshit is done,
The transparency is with regard to
we'll see. I
large
mean, they
gross
passed
short
the other
positions,
reporting rule,
of equity
so
securities generally.
they might pass this
And
one.
as we talked about
It's
before, the
definitely
thresholds
scary for
are
funds.
designed to capture large gross short positions, and whether it's a reporting company issuer or a non-reporting company issuer, and it's intended to capture managers that carry those large gross short positions during the course of the month. So an answer, yes, they would be subject to that.
Will
And
this save
as your question was indicated, there's
BBBYRQ?
jurisdictional ties
Their
to the
shares are
US as well for the
extinguished, so
equity
now
itself.
short sellers already won.
So there don't have to be jurisdictional ties, or there are? I misunderstood the last part of what you said.
Oh, I thought your question indicated that there were jurisdictional ties to the U.S. as part of the question. I'm sorry.
Well, not necessarily for the issuer, right? The issuer might not have jurisdictional ties to the U.S. Is that correct or not?
I mean, I doubt
I'm not
Kenny's
sure I'm following the
sweating.
question.
Most of his short
So
exposure
foreign
is
equity
derivative
securities,
based
are they
through
covered or not?
ETFs, right?
Well, a manager that has a large gross short position in an equity security that meets the threshold would be required to report. Yes.
Okay, that's helpful. I
Didn't mean
think
to confuse. Sorry.
no, that was my fault. I think part of the
Citadel's
issue
about
that
to
I'm
open up
concerned about
50
is
new
duplicative
divisions.
reporting. I think if we're having reporting of short positions that are also reported in another jurisdiction, query whether that makes sense. And I guess, Mick, you mentioned also that the question around whether non-reporting companies should be
Can
pulled
Bears
into
push
the
this to
regime.
4,300?
And I think that, again, I see your point about the breadth of the statute, but I also wonder whether
not without a lot
it
of
would make
resistance.
sense to take
This sell-off
a
actually
more
should have been
graduated approach.
far more
and
extreme, but
I
bulls are
guess
trying to
this would
fight
be
back
a
pretty hard to
question for
save their short
Jessica.
puts.
Are there
They haven't
plans for
managed to
assessing
find a
whether the
foothold
application
anywhere.
of the rule to
Losing
securities
4,350
that
was
are in
really
the
bad for
over-the-counter
them.
markets makes sense? It has a net positive effect on market quality, because I think their commenters raised specific concerns about the potential negative effects on market quality in the over-the-counter market. So what are our plans for looking at that retrospectively? Jessica, I don't know if you're available to answer that, but if not, maybe.
No, I apologize. I am available. I was just muted. first I want to say that there are important benefits in the over-the-counter market. So as to have left out this important market, I think would have been a significant gap. As to assessing the effect, so we can look at whether the data contributes to price efficiency, and we can also now closely track the degree of short selling and whether it's affected by reporting or not reporting. So, for example, not all of the non-reporting companies, reporting here having two meanings, not all of the companies affected will necessarily have managers who will be
If the
reporting
Bulls
on these
did
forms,
everything
and so we
right
could look
today,
at the
where
difference
could we
between those
get
who
to?
do and those who don't, and see if there's a change. So of course,
maybe
if you
75
pass
again?
the threshold, then you do have to report. So I think
I
there's
don't know. There's a lot of
variety
time. It's still really early.
of metrics we could look at
I
to
suppose they
to
could get it
evaluate
higher
the
than
effect
that,
of the
but
rule
that's the
and
only
its
place where
effects
there's
on market
still
quality,
like more
both in the reporting
significant
space
interest.
and in the non-reporting space.
Okay, that's terrific. I appreciate you thinking about that, and
There's a huge
I'm
amount of
looking
put
forward
accumulation
to
out of the money, but I'm
seeing
not sure if it's
Dira's
sold.
work
There's
on
zero
that
ZTEs,
once the
so
rule's in effect and we have some data to look at. One
they
other
could be. They don't seem to be
area where
having
I hope we'll
a
take a look, and I
continued
think you
effect
sort
on
of
the
implied
drop
that
in
we
price.
would in your last answer, which is there are
But it's going
concerns
to be very
around
hard for the Bulls
market
to get any
makers
kind
being
of like meaningful
dissuaded
momentum
from
unless we get it back
providing
above
liquidity, particularly during
43.50.
volatile times, for fear of tripping the thresholds. And so I hope that we'll also take a look at that issue and make sure that the rule is not having a detrimental effect on liquidity, particularly in volatile periods. Any comments on that?
Yes, so this is something that we considered carefully, and absolutely that could be part of an evaluation. Though I will say that because of the thresholds, and because the thresholds are now monthly for the reporting companies, we believe that many market makers will not be subject to reporting.
That came through in the release, although I think the release also acknowledged that during periods of extreme volatility, there could be a fear that that they would trip the thresholds, even if we're considering it on a monthly basis, like as we will be. And so that could be a negative effect, and I think it's something that we should keep an eye out for. I don't have any additional questions. Thank you.
Thank you, Commissioner Peirce. Commissioner Crenshaw.
Thank you. It's no secret that short selling has attracted policy attention, especially during periods of volatile trading, such as the early 2021 meme stock episode, in which a dynamic involving short selling and social media was broadly reported on the media, by the media, media having a variety of mediums there as well. Congress even held several hearings and considered multiple legislative proposals associated with these developments in 2021. And overall, the episode highlighted the limitations for regulators of using existing short sale-related data to reconstruct market events like the meme stock events of January 2021. The reporting regime under Rule 13F2 that we are considering today would supplement currently available short sale-related data in a few important ways. First, Rule 13F2 and Form Show would help fill an information gap for market participants and regulators by providing insights into increases and decreases in reported short positions, which would allow the Commission to observe how large short sellers respond to heightened volatility. Specifically, the Commission would be able to observe on which days reporting short sellers most actively increase or decrease their short positions with more precision, and then correlate this activity to market conditions on those days. This could help the Commission reconstruct market events and design responses to events that take place during times of volatility, similar to the meme stock episode that might happen in the future. Second, the rule would provide aggregated short sale related data in a readily accessible location that is free and accessible to all investors and other market participants. This approach contrasts with that of some exchanges, which provide short sale related data for a fee. Third, the institutional investment managers, or the managers, who would be required to report under the rule represent a more diverse group of market participants than are required to report under FINRA's current short interest reporting regime, which is applicable only to broker-dealers that are FINRA members. In addition to brokers and dealers, managers would include investment advisors, banks, insurance companies, pension funds, and corporations. These data reported by the managers could provide additional context to existing data by distinguishing their directional short selling from short sale activity affected by market makers and liquidity providers. This should provide market participants with more focused information on substantial short positions
that's
held by
interesting.
managers. I'm pleased to support this rule and fulfill the statutory mandate of Section 929X of Dodd-Frank. I would like to thank the staff in the Division of Trading and Markets, Economic and Risk Analysis, and the Office of the General Counsel, as well as, again, every other division that contributed to this rule. Thank you.
Thank you, Commissioner Crenshaw. Commissioner Ueda.
Thank you, Chair Gensler. Section 13F2 of the Exchange Act requires the Commission to prescribe rules providing for the public disclosure of the name of the issuer and the title, class, CUSIP number, and aggregate amount of the number of short sales of each security and any additional information determined by the Commission. Section 13F3 of the Exchange Act then provides the Commission with authority to exempt any institutional investment manager or security or any class of the foregoing from any or all of the provisions of Section 13F or the rules thereunder. Congress, in enacting the Dodd-Frank Act, did not limit our exemptive authority under Section 13F3, like it did so in other places, such as with respect to some of the swaps and derivatives, where Congress specifically curtailed our authority to issue exemptive relief. Now, had the Commission simply implemented the statute by requiring the specific reporting items enumerated by Congress in the Dodd-Frank Act and in Section 13F2, my views would be very different. But the Commission proceeds to go above and beyond what was identified by law by relying on this very broad grant of discretionary authority. This grant of authority, which permits the Commission to require the disclosure of any additional information determined by the Commission, is so broad that an ambitious regulator could interpret it to permit the Commission to require the disclosure of almost any information imaginable. I believe that such ambitious interpretations are unwise. In this case, the Commission has exercised its discretionary authority in a manner that could discourage short selling. Short sales can play a vitally important role in setting a fair price for securities, which is perhaps the greatest protection for investors in the market. On the other hand, there are risks that short sales can be employed to abusively manipulate the market, and it's therefore necessary to mitigate those risks. Short selling as a trading strategy can result in economic rewards for conducting research into the value of a security, thereby encouraging such research. Why should anyone make the effort to conduct research if there will be no individualized reward for such efforts? This can lead to superior price discovery. If a person determines that a security is underpriced relative to its intrinsic value, they can purchase the security and go long. If a person believes that a security is overvalued, then they can sell it if they happen to own it. But if they don't own it, then short selling provides a way to profit from this effort. By virtue of the efficient market hypotheses, the markets as a whole benefit from these private profit-seeking efforts. A market for securities that has informed investors engaged in fundamental research produces securities prices that are more reliable because they generally incorporate all publicly available information. The benefits of short selling go beyond improved general price discovery. Short selling often proactively reduces market manipulators that would otherwise occur. For example, in a pump and dump scheme where fraudsters spread false but positive news about the issuer, informed investors monitoring the market are typically the first to note that a share price is rising above its intrinsic value, and they can profit by short selling. Thus, short selling works directly against the actions of the upside manipulators by depressing the prices of the now overvalued securities. Another example is identifying companies with potential fraudulent disclosures. Short sellers were among the earliest persons to identify the potential problems with Enron. Short selling can be employed to abusively manipulate markets, though. For example, fraudsters might sell short a security possibly through so-called naked short selling, and then spread negative false information about an issuer before covering their short positions at lowered prices. These activities are already unlawful. In addition, the SEC further regulates short selling through Regulation SHO to ensure that markets remain fair and orderly. None of these concerns are at issue in this rule, just the public reporting of short selling and its potential impact on the market. One final point, short selling is comparatively risky. For a long position, the most one can lose is what they paid for that security. However, if one goes short, there is no theoretical limit on how much one might lose. Sometimes short
Is
sellers
the
are
efficient market
captured
in
in
the
a
room
short
right
squeeze.
now?
As the price keeps rising, their potential losses increase. Short sellers may be particularly vulnerable if their positions are revealed in real time to the public, or those positions can be inferred from the information made public. Others may mimic their positions and undermine the returns that they would otherwise make based on their research activities, which would discourage short selling. Public knowledge of their short positions would render them susceptible to a short squeeze and also reduce incentives to engage in this beneficial activity. In designing a rule on short sale reporting, one would hope that the Commission would consider, within the bounds of its statutory obligations, ensuring that individual positions are as protected as possible in order to address these vulnerabilities. Unfortunately, this rule fails to do so. For example, Table 2 on the reporting form requires a manager report net activity for each reported equity security for each individual settlement date during the calendar month reporting period. The Commission intends to publish the net activity in the reported equity security as aggregated across all reporting managers for each reported equity security for each individual settlement date during the calendar month. This goes well beyond anything required by the statute. The thresholds for reporting and the required timing for both reporting and disclosure could have been better designed to protect against information leakage and to minimize compliance costs. There also appear to be lower cost alternatives that would involve leveraging pre-existing data efforts that might have been employed to fulfill these statutory requirements.
A huge effect.
The economic analysis
Frankie.
summarizes these concerns. It states that Rule 13F2 may harm price efficiency by increasing the cost of short selling. Academic studies, both theoretical and empirical, have shown that when short selling becomes more costly, stock prices are less reflective of fundamental information because costly short selling makes trading on information more difficult, and because costly short selling dissuades investors from collecting information in the first place. Further, the economic analysis concludes that Rule 13F2 increases the cost of short selling in at least 4 ways. 1, compliance costs. 2, potentially revealing short sellers information that may have been acquired through fundamental research. 3, potentially revealing short sellers trading strategies. And 4, increasing the threat of retaliation against managers by other market participants. Finally, I have not received sufficient assurances that the information collected on the short positions of specific managers will be protected against cybersecurity threats. The Commission has either adopted or proposed rules with stringent obligations on public companies, investment advisors and funds, broker-dealers, and other market intermediaries regarding cybersecurity, risk management, strategy, and governance. Yet the recommendations today have not been accompanied by any written assurances to the Commission on cybersecurity, even though we know that the Edgar system has historically been subject to prior cybersecurity breaches by intruders. This appears to be another situation of rules for thee, but not for me. Given the unfortunate but likely consequence of discouraging publicly beneficial short selling activity, I'm unable to support this rule. I want to thank, though, the staff of the Division of Trading Markets, Division of Economic and Risk Analysis, the Office of the General Counsel, as well as many others throughout the Commission who have worked on this. Got some questions. Director Hsu, you said in response to a question from Commissioner Peirce that you thought institutional investment managers were already familiar with filing on Edgar due to their obligations to file Schedule 13F. Is that correct?
That's my understanding, Commissioner.
But isn't this the approach here we're taking between Schedule 13F and this new Form SHO very different in terms of what is the gating issue? For 13F, you only need to file it if you've got at least 100 million or more in 13F securities. And a manager generally knows that offhand. Here, it applies to any investment manager, regardless of how much they have. Now, I get that you have to have a certain amount because you got to hit the triggers. But I'm just not clear as to why, given that in the 13F world, I'm sorry, the Schedule 13F world, managers know going in whether or not they're going to have to set up a whole reporting regime or not, because they've hit this numerical threshold.
Commissioner Ueda, thank you for that question. So you're right, the two regimes are different. I would say the difference is partly driven by the sensitivity around short sale data. As you know, 13F1 is filed on the name disclosed basis, right? You know who is the owner of that security.
When are they going to
Here,
deregulate markets and make Jimmy coin the
confidential
reserve
basis,
currency
and
to have
information will be
teddy
aggregated
books
data
and
and
accompanied by
published
barbecue?
aggregated and
This would be
confidential
economically
basis.
beneficial,
So I think that difference
as
is
you
in
would be
response to
putting
comments
money.
that people really worry about the information leakage.
Was that
So I
it?
think these differences are really justified because we address the commenters' concerns and also provide more protection of the sensitive data.
Well, most of this be resolved if
I
we just
get
had
the
instantaneous
different purposes
closing.
and
Yeah,
different concerns, and I do appreciate the efforts that were made in
instant
formulating the final
settlement.
recommendation. But I'm talking to just what's the scope of who's subject to this. I mean, under 13F6 of the Exchange Act, the definition of an institutional investment manager is very broad, right? I mean, it says
How many more decades
any
will the
person
only example
other than a
of
natural
good
person
short
is covered by this.
good short selling?
And then it
be
goes on,
Enron?
and at least when
They
you
just
look
really love
at
to
the
use that one
existing
because
staff
everyone knows
guidance
about
from
it.
investment management on 13F, it says if you are a natural person, because the definition goes on to then say, includes any person other than a natural person investing in or buying and selling securities for its own account, and any person exercising investment discretion with respect to the account of any other person. And so if you look at the staff guidance that the Division of Investment Management has already put out on existing, this definition is for Schedule 13F, it says that, hey, if you're a natural person and perhaps you are managing the assets of your spouse, well, it doesn't say that, but it basically says if you're a natural person advising with respect to another natural person, you are an institutional investment manager for purposes of 13F. And so, I mean, the way I look at that is if a person is managing on behalf of their one spouse, they're now an institutional investment manager under that definition. So that's quite broad.
Commissioner, for that question, I don't have the guidance in front of me, but I think for that question, we're happy to coordinate with my colleagues at investment management to give you a briefing. I suspect that part is really about the advisor part, but we're happy to follow up on this question.
Well, it is a broad definition, and that's why I think this is a gating issue, which is, again, it's not simple to do because it is just such a broad dragnet of everyone who gets picked up on this. And then you run the risk of failing to report if you have to hit these triggers. So even if, let me go back, we have a reg flex analysis in the back, which talks about the effect, but we only define small entities as those with 25 million of assets or more. And we suggest in the economic analysis that because that would be 40% of the 25 under management, that would be very unlikely to happen. But going back to the folks who are not currently 13F filers, that would be higher than 25 million, but well below the 100 million, that can encompass a sizable chunk of other advisors. What have we done to address those concerns in this? Because we've gotten letters from the Hill. Now, maybe not directly on this, but certainly Director Wachter received a letter earlier this summer on private fund advisors. It was co-written to her and Chair Gensler, which said, hey, we're very concerned about smaller investment advisors and the potential disparate impact on minority and women-owned firms, which maybe smaller entities. So what sort of accommodations did we make in this to kind of separate those who are, quite large existing 13F, Schedule 13F filers from those who are much smaller and who might not be currently subject to 13F, but now is going to be subject to this regime?
So that sounds like a question for me, Commissioner. Yes, the definition of institutional investment manager is broad. That is something that is discussed at length in the economic analysis. We are sensitive to the costs of our rules. We are sensitive to the costs of rules that also may increase if there are other recently adopted rules with overlapping compliance periods. That is also something that is discussed at length in the release. I will say that there's various factors here that we expect would limit the cost. First of all, the degree of overlap is not great, and the release provides details on that. The other point is that, yes, while the universe of institutional investment managers is broad, and while, yes, it is not entirely the same as the current 13F filers, we have to then think about those that would then be crossing the threshold of crossing these numerical thresholds and who are not 13F filers. And then we would interlay those who are not, whether they're affected by the rules. So we're talking about those who are not current 13F filers and who have really quite substantial short positions. So that's the universe. I'm not sure that universe is very large.
Well, yeah, part of the reason why I raise this, if you take a look at, for instance, even on what we find is, if you look at the data on who are the existing Schedule 13F filers, the vast majority of them, for instance, are 500 million or less total that they report. So there are going to be a lot of small advisors who are picked up on this. This is something that IM has worked on for a while, but if you I'm just looking at the stats here.
Are we going to see VIX 20 today? We might.
As of last year, over 50%.
If this passes, I think there's like a decent chance.
13F filers were all with $500 million or less in 13F reportable securities. So it's not as if we're talking, really huge. I saw, we do talk about the impact of hedge funds on short selling, who are quite large, but these are all relatively small players. And if I'm assuming that if TM or exams wants to correct me if I'm wrong, then we're going to expect advisors who will to all have policies and procedures should they engage in shorts to determine compliance with this new Rule 13F2. Is that correct?
So, Commissioner, I think the definition of institutional asset manager, institutional investment manager has been quite clear in the industry. You are right. There is maybe a kind of long tail of small managers, but I would note, and in connection with what Jessica just said, long position is sort of the model position of investment managers. Only a selected few would engage in short sale strategies. So it's not clear to us that the long tail would equally apply to short sellers. We need to see the data in order to judge whether there's a long tail of short sellers, and that might be too small. Maybe this is the way you're getting to. The cost may be high for these managers, but it's hard for us to judge without seeing the data, because again, short sellers is really a small fraction of all the managers.
Yeah, well, what I'm trying to make is, prior to this rule, at least when you're thinking about the 13F universe, you're all thinking about the $100 million in 13F securities. Do I have it or do I not? This now changes it very differently. I worry, to my point that I made in my opening statement, that the easiest policy and procedure is just don't short. Because if I don't short and even give myself the flexibility to do that, I don't need to have the policies and procedures. and then I don't need to worry about, in essence, every time I do a short, retroactively going back and checking to see
Is
if
the
they're
V
triple
dead?
criteria.
If we lose
They have to
25,
file
yeah,
a report
Vega's
on-
going to
on
pick up a
13F
lot.
too.
Or VIX.
And again,
Vega risk goes
this
up.
will be implemented time. I think I share what.
If we lose 43.25, we might
I
test
believe Commissioner Bush may have
4,300.
said is that during the period before the compliance date, as things shake out, we think about the impact on smaller advisors on this. And
Two
we
questions
do have
before I got
incentive authority,
AFK because
that
listening to
we
this is
give,
a
and if
waste
it's
of
appropriate to
time.
fine-tune
No, it's
this,
not.
I hope
Was this scheduled in
decent teams
advance
thought
or a
about that,
surprise?
because we don't
I mean,
want
no
to
one knew which way they were going to
eliminate
vote.
smaller,
Legit, how much
advisors
longer
from,
before they
in
just
essence, being able
vote?
to think about
And
short
they
selling
have
as a
to
legitimate
discuss the
trading
rule
strategy, or at least a
fully
part of
before they
what they're
can.
doing.
Pretty
I
clearly,
don't have
someone
anything
trying to
further.
cause
Thank you.
fear going into a
Thank
long
you,
weekend.
Commissioner Lizarga.
It's working.
Thank you, Chair Gensler. As with securities lending, excuse me, short sales, provided they are conducted in compliance with applicable rules, can play a valuable price discovery role in our capital markets. That said, they can sometimes contribute to, or even cause, precipitous price declines, facilitate market manipulation,
Is it a long
and generate market
weekend?
uncertainty and
I don't
volatility.
think so.
To minimize the gap between these benefits and downsides, the Commission's action today strikes the appropriate balance between increased transparency for investors and regulators of short sale related data and concerns about real-time disclosure of trading strategies. Currently, regulation show is a primary rule governing short sales of equities. Although this rule imposes some record-keeping obligations on broker-dealers, it does not require market participants to track whether short sellers cover their short sales or report bona fide market-making information on a regular basis. Today's rule will shine a light on short sale activity by institutional investment managers. It fills gaps in the data that these managers currently report about their monthly and daily short sale activities. This data is essential for the Commission to assess and monitor risks related to large short positions, for reconstructing market events, and for deterring fraud, manipulation, and other potential market abuses. By improving market visibility, today's reforms will also make the price discovery function that shorts can play more robust and transparent. By making available additional information about variation in short positions, as well as sentiment in the market during a specific time frame, the rule may increase price efficiency and help market participants in making more informed trading decisions. Overall, the short sale disclosure rule will increase transparency, enhance market
They got
oversight,
him.
and reduce
The guy in the
systemic
bottom
risk from
right.
large short selling positions. The rule complements the action the Commission has taken today to address transparency in the securities lending market, especially
Lizaraga
public
or
disclosure
whatever
of
his name
securities
is. I
lending
don't
information.
remember.
Through both actions, we fulfill the mandate that Congress gave us under the Dodd-Frank Act and our mission to promote fair and transparent markets. The cumulative impact of these reforms is positive and benefits the public interest and the investing public. We have a
So
responsibility.
it comes down to Gensler, probably.
I am pleased to support the short sale disclosure rule and join my fellow commissioners in thanking Commission staff for their hard work on this difficult issue. Thank you.
Thank you, Commissioner Lizarga.
Glisarga.
I would just note, and I support this rule. Congress mandated this. I know that we got good and thoughtful comments from the public about whether there was information leakage, whether it would somehow affect their short selling. But again, I repeat, Congress mandates not less than monthly that institutional investor managers put this information out. And since 1978, they've been doing this on the long side quarterly. The 13F1 is written a little differently around $100 million asset managers. 13F2, Congress could have put that in, they didn't. I think this is a very, as Commissioner Lizarga said, balanced approach to fulfilling Congress's mandate to promote transparency, which helps the integrity of markets and it helps promote competition in the markets. We had the events in early 21. There was a lot of focus once again on short selling and the GameStop events. I just remind the listening public also, we had events earlier in 2023. In March of this year, there was a lot of focus on weather and what effect short selling may have had on a bunch of regional banks. And there was a number of members of Congress, both bodies of Congress, that asked us to what are we doing around short selling? And I was one who said, we have a mandate from Congress to do something here. We put a proposal out. I think this staff has really thoughtfully gone through the comments, and here today we have an opportunity to adopt something, just as this is now 13 years since Congress put it in place. I don't know why my predecessors and our collective predecessors didn't do it over 12 or 11 years, but I think that we're obliged to do this, and I think this is a very balanced approach, what has been put in place here in front of us. We actually have 2 votes. One vote is on adopting the rules, or more technically, if I say this properly, a vote on the Rule 13F2 and related form show, and then we'll then turn to the amendment to the CAT NMS plan. But if I could just first ask commissioners how they vote on the adoption of Rule 13F2 and the related form show.
No.
Yes.
No.
Yeah, yes.
Yes, the ayes being 3-2, the rule and form are adopted. Next, we'll vote on the notice of the amendment to the CAT NMS plan.
No.
Yes.
No.
Yes.
Yes, the ayes being 3-2, the notice will be published in the Federal Register. I think with that, I want to thank everybody. I thank obviously everybody at the agency that's worked so hard, but my fellow commissioners and their staffs on these important rules. And with that,
No,
the
I'm not an
meeting is adjourned.
institutional manager.
Thank you.
It still doesn't. I'm not a registered FINRA member, so I don't have to do shit. I don't think I have any aggregate derivative positions in excess of $500,000. I don't know how they source that, though. Maybe. I'll ask my lawyer. No, NVIDIA's not that much. Dude, institutions do not like this shit. I'm not sure it's the best way to handle it either, but more data better. I think this is going to lead to a lot more illiquidity and a lot more volatility in the market. Short sellers are going to start to short shit really, really fucking hard instead of building up short positions over long periods of time, and then they're going to close it out before reporting's due. In the same way longs do with long positions. I'm not entirely sure that's a win for retail, but I like volatility. Gamma squeezes is gonna happen more frequently. Possibly, yeah. They didn't really address ETFs though, which is still a blind spot for the SEC. I don't know why. I don't know if it's they just don't really want to fuck with the ETF market because of how much liquidity it provides, but I still haven't patched that hole. Well, they could simply not report their position. Isn't this all a big nothing burger? Yeah, I mean, they can get exemptions, right? So, I mean, ultimately, it probably will be. Although I could see lenders not liking the current situation and pulling back their risk. That could be interesting. Time to V? Might be. We'll see. Let's see if they get like a good foothold on shorting VIX here. 43.25 is a level we kind of expect them to defend, right? If they fail to defend 43.25 here, that's pretty bad. I can't say I particularly like this. I think I'll leave my puts open just a little longer. Or it's not necessarily bearish. If shorts are going to pull back positions because they're overextended and they don't want to report them, I mean, I still don't think it's effective for like 18 months or something. But they'll be encouraged to pull those positions back. Next downside support is 43.25. That's where the longer dated Vega risk is. But we already slipped longer dated risk at 43.50, which is why VIX spikes so hard. So I'd expect them to at least try to save 43.50 today, if not get it back to 43.75, where they've also sold puts. But those are for the 20th, they're for next week. Both 50 and 75. Holding 435 call for 10.20 on LMT. So it looks like it could keep going up. I know the situation in Israel's heating up like quite a bit right now, but 44.45 is possible. Especially if Dow starts turning around here again. You could even, I don't know if you'd see it today, but you could. Yeah, LMT's got a decent amount of range. Hmm. Let's see if we fail or break up, I guess. see. Increase put interest to the downside. Some of the puts are falling off a bit. Or flipping sold. Hmm. There's some put buyers. Interesting. $280. Do I want to cut the long interest? Fuck, that's so risky. I have another day on that. Hmm. Low volume. Bulls ain't putting up much of a fight. No, not yet. Firms have been busted for not marking trades short correctly, and they just eat the penalties when caught. Cost of doing business. Won't they just continue this practice to avoid disclosure? Probably, yeah. I had some talk of RAD yesterday. Could you elaborate on the situation there? They might get a bank bailout. They might be able to get a loan for their for recollateralizing their debt. I guess not really recollateralizing. They're getting a loan against their assets. But they might be able to restructure their debt. I don't have a lot of exposure to it. It's just kind of like a fun thing. Hmm. 36. Hmm. Brad's getting crushed. The pump to 43.50 has begun. Not yet. But maybe the first step of it. Hmm. I'm not really sure things get much more bullish from here. Let's see what we've got. We've got a decent number of calls coming in at 35. We've got short puts at 40 and 60. We have a shitload of calls at 50. Okay, that still worked. All right, 43.35 calls back in the money. I could take profit on that. Huh. I'll leave that open for the weekend just in case. All right. Notification. Oh, thanks. I had it all turned up because we couldn't hear them talk. If the fines are 100% of the profits generated through unreported positions, would that curb the cost of doing business mentality? Yeah, but they're never going to do that. My friend bought 150K worth of WE, $12 call leaps. How do I tell him I think his wife is hot? Probably just directly. Do you think they'll short VIX? Yeah. It's not a good time to buy calls on SOXS or monthly puts against NVIDIA. This probably isn't the best price to buy puts against NVIDIA. Maybe. Rejection off of 475. 460 now. If it broke down below 460, sure, but there's some risk of a bounce at 50 still. So you'd have to watch that. They could do a last Friday style push. They may. They may. There's still calls open from earlier at like 43.75, but they're gonna have to pump the ever loving fuck out of this to get it there. You retracted your message, Trina. Dear God, what the fuck is that? Are those pickle flappers? How you doing, Trina? I'm gonna have VIX closer to under 16 tonight, right? I mean, that doesn't mean they're gonna get it there. I got another booster shot, and now I crave Microsoft products. You should just get Office 365. It helps. It helps tone that feeling down. Okay, me? I'm doing all right. Hanging in there. Thanks for asking. Do bulls have a foothold, or can this still fail? They have a little bit of a foothold. We need to get over 43.40. Or, well, really 50. But that may be where we're headed. We got, what? 3.5 hours? Plenty of time. Sometimes Gherk shilling too hard. Shilling what? Who the fuck is this asshole? So just to confirm, if a cop thinks I have drugs, they can take 100% of anything they think is from drug money without conviction. But if they prove I got 100 million on an illegal trade, I owe 5%. Yeah, that sounds about right. Hey, look, a Japan carry trade emoji. Nice. Here's my question. What's Super Stock going to do if they find out there's no shorts? They'll just say crime. Okay. Whatever BBBY buyers are doing right now, just a mass delusional episode. Delude themselves into believing whatever they want. Yeah. I'm just curious, like, what the narrative would be. So, like, the SEC reports net aggregate derivative and net short positions, right? And then Jimmy is just like not all that happening. Are you still bullish on Jimmy? I mean, no, but I still have shares. I think Cohen's a fucking idiot. They'll blame the current Middle East conflict on Kenny trying not to pay them yet. They'll say the shorts are hiding in Brazil or whatever weird entity they scapegoated before. Nice. What's your take on Zach's rating GME a strong buy? Are Zach's actually any reliable when they give their ratings? I don't think so. I mean, I really don't know what like their methodology is, but it's probably just like some aggregate of like prior price and like fundamental evaluation. Do you have a prediction for how long the full market correction to play out? I don't know. Shit's starting to get kind of spicy though. Shorts are getting reported. Bonds are fucking way too high. Liquidity's drying up. Generally speaking, like if you get enough fear at once, it's just gonna go down really fast, right? Like fast corrections are more advantageous for institutions than long ones over time. Y'all hating on the greatest CEO of our time? He can't even make money. How's he the greatest CEO of all time? Like, where's the proof of that statement? You're just kissing his ass. You can't even find someone that knows HTML to update the website. Good CEOs get their companies to make money. Yeah, I mean, seriously, like, Evoken hasn't done anything. And Chewy wasn't all that hot when he sold it. Otherwise, he wouldn't have fucking sold it, right? Dude, he's been running the fucking companies this whole time. Just because he killed a scapegoat in order to belay his shitty earnings. Let me get this straight. RSS banned you for explaining how things work. But every time something of any significance to GME happens, half the sub is over here interrupting people trading SPX. Yeah. That's generally how it works. So a VC-backed guy that created an unprofitable dog food company and then sold it is the greatest? Apparently. What about CoreWeave? CoreWeave went from being worth $100,000 to having like a VC valuation of 10 billion in like 3 weeks. I would argue that guy's a way better CEO. He doesn't even have experience. He was a derivatives trader. He traded like commodities for Goldman or some shit. CoreWeave CEO is actual goat. Look at Jensen. The fucking guys loaning out cards that they haven't sold so people can get asset-backed loans and then pay him back for those cards. He's generating billions in fake revenue. Isn't CoreWeave CEO just Jensen in a hat? Lisa sues the goat. Yeah. Good. It's actually 3 Jensens stacked on top of each other wearing a trench coat. Gherkin, my calls are printing and I set a stop. Nice, man. Hey, sending pics of his popcorn kernels, then getting blackmailed is the true goat. Wait, did some like AMC thought bait Adam Aaron into sending her dick pics? Is this a thing that happened? That's amazing. $43, $25, $20 bull put for the weekend. Risky. But I don't know. It could be okay, I guess. It's kind of risky. He claims he was catfished. This is news to you? Yeah, I don't fucking pay attention to what's going on with AMC at all. Like, if I see AMC, I just look the other way. Yeah, it happened. I wonder if Trey Trades knows AA is cheating on him with a Tinder thought. That's fucking awesome. The stock went up after that news came out? Of course it did. Did they do the vote thing? Was it bullish? They voted to disclose aggregate short positions. I can't wait till hedge funds start disclosing massive short positions that are completely hedged or have lopsided hedges and then have people come in and try to squeeze them out. It's going to be like a dump and pump. It's going to be fun. It seems like 43.75 is possible. I know. That's what I said this morning. It already happened, but it can happen again. What camera did you use for the stream? I remember you got a new one, but it was having overheating issues. Yeah, no, I got it fixed. I just have like a Sony, I don't know, it's some kind of Sony camera. I don't know what the fucking model number is. Face Ripper to 43.97. I don't know about that. There's gonna be some resistance. Positioning's still gonna need to change quite a bit for us to get that high. Although shorts are capitulating, which is driving most of this right now. Did Gary Gensler just kill Moana? I don't know. We're just gonna get in 18 months, we're gonna get an Edgar report that shows that the only GME short left standing is Carl Icahn. And he's short at $420. Do you have any thoughts on BTC halving next year in April? Do you think it will give any good pump in crypto, or is it all just speculation still? I mean, the fact that everyone thinks it's gonna, like, making it even harder to mine is gonna somehow improve the value of a worthless asset. Yeah, I don't know. I don't have a lot of faith in it. Mistook Blackwood's fake identity as a woman with whom he'd had a prior relationship. According to Semaphore, she was 17. That's gonna be awkward. $43.75 or $43.20. Well, they have short puts at $43.50 and $60, so let's see if they get them back out of the money. If we lose 40 again, it could get spicy. Yes. Although this upside here is driven largely by long put capitulation. This isn't really being driven by a lot of call buying. So if like call buying starts to come in, and there's already a lot of long calls at 43.50, but if we start to get more call buying, it can move up. It sounds like increased transaction costs to me. What? For shorting? A prior relationship with a 17-year-old still sounds illegal in most states? Yeah. Was that why you've been ignoring all my ballerina comments? No, I just didn't see them. Hmm. It's gonna be a lot of risk. It's a clown world and we're just living in it. Yeah. A lot of call side breakdown on the drop before. Did a lot of the call side breakdown on the drop before. The further out of the money shit, yes. Like above 80. Above 43.80. Not too much at 75. Like 75 to 85 still looks pretty good. 90 to 400 weakened quite a lot. And then above 400 significantly. But there's short calls that got sold on the drop, and those are gonna get fucking pushed out. And the long puts that took advantage of the drop have largely capitulated, so we'll see. I mean, they definitely have the ability to pump it here. There's going to be some resistance at 50 and 60. Above that, though, not a lot. Checking in, did we ever fill the overnight gap? Yeah, we did. FINRA's supposedly testing their T1 process that might roll out in 2025. Won't this create even more volatility? It could, yeah. I wonder how many of those puts are sold. The ones, actually, the ones for today and for the 20th are both sold pretty heavily. The 60s are sold too. That was S, by the way. It seems weak compared to previous pumps. I'm sitting cash for now. Yeah, I mean, I wouldn't chase it until there's some confirmation. How do you know what OI is sold and what is bought? There's a few ways to tell. You can use the time and sales. You can look at volatility at the strike. You can look at the spreads. You can look at skew, like the smirk over time. So yeah, they're always going to be estimates, but some of the estimates have higher degrees of confidence. BOFA says SPX can stay above 4,200 as long as long end yields don't go above 5%. Tell me you're holding the bags without telling me you're holding the bags. But long end yields keep going above 5%. Spooky market day, Friday the 13th. One sec. So 15, let's try that. Ooh, yeah, this is interesting. 43.60. Yes. $12.50 right now. Decent volume on the buy side there. A little bit more pullback. 35. Let's see. 35 is the call wall. So this is important. VIX picking up again. It looks like momentum's falling off just a little bit. Fuck. It stopped out of my calls. God damn it. Now it's falling off a lot. Okay, 67 broke down. What are the SPX vibes for today? Bulls are big fucked right now. And they're trying to claw it back. They're they're not doing so hot. They were doing good there for a minute. They just got dumped on again. First gamma. Let's see. 25, 30, 35 calls. They lost the call wall at 35. Ooh, fuck. That's rough. Yeah, futures are just dumping right now. 20K volume on the 5-minute. May still set a higher low, but that's fucking rough. VIX vertical, yeah. Well, there's not a lot of vol control. It's been pulling back. So VIX is a lot more fluid now than it has been. There's also a shitload of Vega risk, like, and this all over this entire part of the chain, right? Because they've been selling like the October 20 expirations, like at the money, and they've been selling them in the money. Bear's still winless when I have calls and undefeated when I have puts. Is that maybe a you problem? Israel bombing targets in Lebanon. Ooh, interesting. I should have confirmed the bounce at 43.50 instead of 40. Yeah. You may still get lucky, but you definitely wanted to wait for a breakout of 50. I can't wait to buy put in 5 minutes and get blown out when we recover 15 points in 10 minutes. I would be patient. VIX over 20 into the weekend is going to be spicy. Well, if VIX closes at 20 into the weekend. VIX will drop if we go back over 43.40 again. I'm skew positive today, so I finally grabbed another put. Almost perfectly at the bottom. I got some theta and went ahead and turned it into a spread. So it's okay, but my timing is shit today. Don't feel too bad. The future sellers make it really difficult to assume any like kind of momentum on SPX. I just bought a call and it accidentally legged me out of a spread. It took me so long to get here and I owe it all to you. What's my prize for reaching PDT? Any good picks for a wild weekend in the Middle East? Just defense, oil, gold. Yeah, I'm already long those things. Gold's ripping, which is super dope. Because I've been fucking underwater on that position for like 2 months. We hear at B of A, buy through the dips because DCAing is how you grow wealth. Yeah, who doesn't want to buy the dip? It seems like buying is way less volume than the selling. No, it's not. It's just the selling's far more effective. Negative gamma environment, so increased volatility, right? Bad time to enter silver? Probably. This is not that bad. It's about where I bought in. A little lower. 2022 is a better, like a slightly better entry. You may not get it though if everyone's getting freaked out. You could confirm the breakout above 23. That might be yeah, like you could try to confirm the 23 level. That might be like an okay entry. This kind of just looks like shit. I need a God candle to 43.70. You're only gonna get that for above 43.50. Do you like cat for a bounce to 275? What, into the end of the day or something? No, not particularly. Cat cat rejected off of its long-term trend really hard this morning. Might break out, but it doesn't look particularly good. Bull's just waiting for cheaper calls? Maybe, although calls aren't really too expensive right now. It's not really the calls that are even the issue. It's that every time they have plenty of calls. It's just every time they buy a bunch more and the market starts to move, all their delta gets crushed out by future sellers. There's been several just giant fucking dumps today. Like 40, wait, hold on, 50? 45, 46, 40, and the most recent one, 30K contracts. So it's, I mean, the dumps from the future sellers are getting a little weaker, but we're still holding that line at 4,400 on ES. Gold ripping super bearish. Yeah, I mean it's not super bearish, but there's a lot of fear in the currency markets, right? Banks need gold. Can confirm the calls I bought are getting cheaper. It's too soon to buy calls. Chances we see the upside for SLD with all the futures selling this week. I don't know. I mean, they're just like locked in a battle with each other, and someone's gonna win. The Bulls have gotten a couple wins. The Bears have gotten a couple wins. Mostly, it's just increasing volatility, right? Like our average price over the last 3 days really hasn't changed much. There's just a shitload of vol. Like we're still mostly just doing all of our trading in this range. I think if we lose 43.50 though, this is probably, they're probably fucked. That's gonna be too hard for them to get their, like, all the out of the money shit they bought it for, like 44.25 and 50 in the money at that point. How do banks need gold? Risk hedging. What's your prediction for VIX in the next 2 weeks? I mean, I think we're going to continue to move, like over the next month or so, I think we're going to continue to move into a higher and higher volatility landscape, which is something that I've been talking about for the last couple of weeks. But yeah, I mean, like, like volatility correlation with like the contracts in front is picking up quite rapidly, and generally that's consistent with a return to a higher volatility environment. I'm surprised we're not in one already, honestly, with a fucking war going on, but another war going on. How does buying gold hedge risk for banks? There's no gold standard. Well, no, there isn't. But it can hedge currency risks. What's up, Gaff? Did you hear they're disclosing short selling? Now we're gonna be able to see your short GME position, you fucking shill. SPX making a head and shoulders on the 1 minute. Kind of making one on the 5. If SPX loses 43.25, this shit's gonna get really ugly. Nice, Derek. It's been a while, so I'm just checking in. I'm gay now and a bear. Nice. Bull's about to get blown up again, or what? Yeah, I mean, if they lose 43.25, VIX is gonna fucking rocket. Like VIX is going over 20. Hmm. Is this going to ruin the pre-SLD pump next week? It could, yeah. If we start losing Vega, like the big Vega levels again, like 25 here, we already lost 50. If we lose 25 and 4,300, that's gonna be really bad. What are futures doing? Some kind of fighting for 43.55 again. This is the third bottom here now. Yeah. There's still a lot of sell volume. Vixen backwardation again. Ooh. Break it to me. Are my 4,400 calls dead? I haven't been able to tune in or check the market for the past 3 hours. What the fuck is this market lately? It's almost like you told us it would be volatile. Come on, bulls, grow some balls and get it up. I don't know when your calls for 4,400 expire, but very likely if it's today, then yes. I don't think we're getting back to 4,400 today. I'd be surprised if they were able to get back 4,360, and it looks like their short puts are gonna get fucking squeezed out if we drop much lower. Yeah. Losing 43.25 is disgusting. You got a lot more sleep during the bull market, didn't you? Maybe. VIX 20. Yep. Explosions in Tel Aviv. You timed that comment poorly, Big Bear. It's okay, Dork. We have pets. These moves are fucking crazy. No shit. I try not to get angry at anonymous market participants, but I hope anyone who's legitimately bullish on equities loses everything. Yeah, I kind of agree with you. I mean, it really sucks, but fuck them. Here comes Moody's over the weekend. I don't think so. I don't think we have any reason to see any downgrades right now. Gork, only have calls. I'm ruined. Why? Why would you only ever have only calls? Better yet, if you had only calls, why did you continue to have them? Like you had them here and here and then here. And here? He's not new here. Does JPM hedge the sold puts like they do the sold calls with futures? If we were to fall below the sold puts, sure. God, this is gonna be a bearish fucking weekend, man. If we hit close with VIX above 20, the fear is gonna be visceral. I can't close this. Fucking hate this account. Those are $2. Nah, that's not too bad. Hmm. You can sell the adjacent strike to work around PDT restrictions, although you obviously sacrifice a little bit of profit. I can't even sell the strike. I can't open any orders on it. Gary fucked my calls. I don't like him anymore. That's I didn't really like him all that much before, but if you heard an audible explosion near your apartment, would you take the time to buy more puts before evacuating to safety, or would you just evacuate? Why would I leave my apartment if things were blowing up? Yeah, that's fucking bullshit. If they didn't, this would all be a lot easier to manage. Still defending 43.25 here. Well, I think this test is it. If the Bulls lose this, it's really bad. And it's not looking good for them. Well, Jeffers did have his bear suit on this morning, if you didn't notice. I didn't. Okay, but can my 10 rad calls save the market? Probably not. Did the short puts close or something? Nope. Some of the 60s, but none of the 50s, and none of the 40s. There are, however, long puts coming in. 43, 25, 15, 20, 15, 10, 5, and 4,300. Yeah. No way the pumpers lose here. I think they might. Anything like so below 43.25, any pump attempt they make, they're just gonna get slapped down by the market maker. Like this gets really, really bearish now. We haven't lost the support yet, but we're very close. And VIX is climbing again. So there's even more 0DT puts coming in. How do I join the Discord? There should just be a link in the description, Parth. Express shorts running? I wonder. Ooh, interesting. That'd be cool. I only needed above $12 to be back at break even. Fantastic. Although that might not be that hard. The float's only what now? 3 million shares? Express shorts don't want to report. Probably not. They've been entrenched for a long time without really any covering. JFresh is super amped. Yeah, losing this is a big deal. Have you cut calls? Yeah. I got stopped out of most of my calls earlier on the first big leg down. And then I bought more calls here, and I got stopped out of those over here. But I got stopped out of a lot of shit like right here. I still have my November puts and stuff though. So I'm good. I'm good to the downside. I'd like a little more of it because they're still out of the money, but if they find any support, I can buy back in. I don't think they're going to at this point. This is really bad. And they already pumped really hard once today and didn't fucking get anywhere. Like 43.25 to 43.45 earlier. Like this fucking leg up on the back of the put capitulation. They tried to pump the fuck out of this and it still failed. It's so cool that we have 0 DTE puts. That never happens. They're not waiting for something. They're trying to fight all their Vega risk from getting exposed. Volume on futures is not very low right now. I just noticed that YM is the only thing even remotely holding up. It's been outperforming all day. Why would they be buying 0 GTEs this late in the day? It's not that late. It's only like 1:30. Fuck. 4300s, the next resistance? I mean, there's really nothing else down here. Dork, my $2 4300s are gonna rip. Yeah, I see. A promo from 25 to 35k today, thanks to puts only and Barrick gold long. Nice. I don't have any Barrick, but Sometimes I play that instead of like GLD. But GLD's been kicking ass. Look at how hard text. Yeah, I was just gonna tell you, Dork. Look at how fucking hard text getting hit. NQ's down like 150 BPS today. Who had the highest 0 DTE calls today? I think I had 40. I had some 4400s. No bear song. We need this to keep dropping. Yeah, I'd be okay with that. If you play the bear song, I'm unsubbing. No way this pushes through 4,300. I can't believe that. I mean, the next like big ES resistance is at 4,300, which is like SPX like 4275. There might be a little support in the like 4340, 4330 range. But this is what happens when 0 DTE puts get bought, and it's beautiful. I'm going straight to the what? I gotta turn these fucking emojis off. I'm going straight to the bar if we close this week, Red. That'd be fucking nuts. Can this have a lessening effect on SLD? Maybe. This is really bad. Like, you understand that all of the positioning that the Bulls built over the last, what, week and a half? Since last Friday is just fucked right now. They have the high, like, the MM has the highest Vega risk since we started tracking it 2 years ago. By a lot. By like, let's see, in 2022, the absolute peak of like Vega risk for the market maker was in September, and that was about 8.3 billion per 1%. It's currently double that. Well, almost double that. 14.18 billion. And that's just the monthly contract. There's another 9 billion on the weekly. Go to October 20th AM. Look at 4340, 4350p gamma. Tell me what you see. Well, they were sold like crazy yesterday. 4350, 4050. The 40 doesn't the 40 doesn't have much. 4300 skyrocketed. I mean, I can only get so erect, JFresh. All right. Do you want me to just send it? Do you want me to send it to you here? You'll love this shit. Was this one of the situations where we dropped too hard? No, I don't think so. I don't even think bears need to get actively involved in this. Like, the fucking MM's just gonna keep selling. HE holding up the market. I mean, I can't imagine that short sellers on that aren't going to take advantage of this and try to cover a little. So if it's stable, it's just because there's covering going on. Fucking Rite Aid liquidity is doing some weird shit, dork. This looks like garbage, though. Why the fuck isn't this trading at all today? A 1 million volume all day, and it's gapped all over the fucking place. Do you think your SPX0 DTE spreads are a lost cause? I mean, yeah, I can't close them anyway. But they're like $3 credit on $5 risk, so it's not like a huge position or anything. How crazy would a move back to 80 be? I think it would be moderately crazy. I mean, don't say that right now. I want my 4300s to print. Trying to get VIX back under 20. Okay, we got VIX back under 20. The shit's gonna get spicy. Here comes the V. Maybe. Or it fails again. Ooh. That's like 30 minutes though. Let's see if they get back 25. I'm gonna try to squeeze the puts out. God fucking damn it. Welcome to volatility. I love how VIX is supposed to track volatility, but it only tracks down. I'm now 5% of the OI on the strike. Oh, Jesus Christ. $4,300 sad boys. Just nobody set stops. Was 130% not good enough? So this rejects, you might get a chance to get him again. What's happening? The market's going crazy. It's awesome. Come on, clowns. 150 BPS up. You can do it. That's ridiculous, Doric. Why stop at 150? Just one end of day push all the way to 44.50. Oh, the bulls are failing again. Yeah, this is still a bad range for them. Holy shit. That was impressive. Huh. Hmm. Jesus fucking Christ, dude. Look at this shit. Volatility almost got a little bit out of control there. Let's do it again. 43.25 rescue mission. Yeah, but if they de-risk here, VIX is going right back up again. They're not going to be able to close at all. Maybe they're going to try to de-risk 43.50. Or 4300s. Hmm. What's yen up to? 149.54. I wish Yellen would do a surprise 30-year auction right now or something. That's not how that works, Gene. They're going to have to pump this higher. Yeah, this isn't good enough. I'm not sure if you missed this, but Siri's about to get a new high on the day, pushing towards 5. It's still at 480. I picked up some calls on it earlier, some more. I just want my fucking Jan 5s and 6s to go in the money. But yeah, it's trying. Let me see something here. Puts. October 20th. 27. Oh, Jesus. There's 27,000 puts at 5 for the 20th. Why is the options interest on this shit so high? 18,000 for November 17th. It's 23,000? Jesus Christ, there's 74,000 leap puts at 375. Yeah, the call interest isn't even remotely equivalent. How are these fucking spreads so wide and these strikes are so liquid? $70K owned by the pickle jar? Puts? I doubt it. I have a December 15 for Syria, but I mainly use it for decoration. You think oil will stay over 90? Would that be great for the October inflation print? No, it wouldn't be. Are they about to do pumpies? They're trying. They're trying to get a foothold here, but this isn't a very good range. They might just lose it. You think oil will stay over 90? Are you leaning towards ups or downs? I mean, at this price, I'm still leaning to this fails. I might get 43.15s this time. I wanted to break below 25 again though first. Hmm. So watching here, if this rejects, I'll probably just buy out the money puts, and then if it breaks above, I'll pick up the calls. Volume's dying off though. It's gonna do something. Fast too. It's consolidating really fast. I don't know. Vol's about equivalent to the last time we were here. It's a little lower than it was on the first drop. Ooh, I wonder if VIX correlation on the week has gone positive yet. It's gone down? What the fuck's going on with the futures contract? That's on Friday the 13th, and short reporting video chatathon combo in regards to intentionally causing fear, meaning the Fed won't need to hike again. I mean, if yields stay in this range, the Fed may not hike again anyway, but inflation's up, so we'll see. I think it might add to uncertainty, but I don't think this is intentional. I mean, the bulls are getting fucked hard. This isn't. I'm not sure what you're inferring. It seems extremely conspiratorial. You generally wouldn't let billions of dollars of your positioning get buried and shoved, you know, $75 out of the money by choice. It's okay, Terry. It's like charting the synthetic swap for the carry trade. I'm just inferring JPEG grew a pair via GG. I mean, I think the like SEC rules definitely had some effect today, but at this point, like, this is just positional. What time is it? 2? What's this gonna do? Looks like we're very, very slowly losing the resistance. All right. Yeah, what SEC rules? Oh, you didn't hear they voted on 2 short disclosure rules today and passed both of them. It's not like there are teams of risk analysts to ensure that doesn't explicitly happen. Clearly this was calculated to crash the market. They don't go to effect for months. Yeah, but people still don't like him talking about it. I don't think they go. It's like 18 months, right? That's quite a long time. Quite a long time for Gary Gensler to be replaced and those rules to be gotten rid of. They weren't a surprise, though. The market knew they were coming. Well, they knew they were going to vote on them. The vote themselves is not a guarantee, though. Prime Minister of Israel, Benjamin Netanyahu, is preparing to make a statement to the media. Possible catalyst? Maybe. This is some chop here. It's consolidating. Rod shorts must be quaking in their boots about this new rule. You mean the one that goes into effect after Rod's already undergone Chapter 11 bankruptcy? Just 2 SEC members are planted. Yeah, that's how getting those positions works. We must insist, do not delist. Do you want me to paint you like a sandwich board? You can just you don't have to go to Rite Aid corporate. Just go to your local Rite Aid. Could this be an inverse head and shoulders? Yeah, but it can also fail. Carl officially 0 for 69 on Tesla calls. Why do you keep buying calls on it? Fake headline. Ortex announces layoffs of 95% of staff and files Chapter 11. It makes shorting over 100% impossible. No, it doesn't. None of the regulations have any effect on reporting for like ETFs or authorized participants. They'll never close that loophole. It provides too much liquidity. It makes markets efficient. No, there's just they made the part of the disclosure rules for market makers. Nothing changes from the updated rules. They already report this information. They don't report aggregate shorts to Edgar. They report them to FINRA. Ooh, little bounce. Was the hanging peener a bullish or bearish signal? I'm trying to enter something. Almost bullish. Not quite. That's a bullish signal. This can still fail before 43.35 though, so be careful. They act like they hack into Edgar all the time. It's been hacked a few times, I think. And less bullish. Ooh. Bull trap. There's still a gap at 43.17. Yeah. They got me, Gurk. I'm sorry to hear that. That was so evil. That's why you confirm breakouts. Bull bear, bearish bull bear trap. I stepped and hit, we ride. That rejection doesn't look good at W. Retest and hold. Well, I mean, not necessarily support, but the next call level to the upside, which is at 43.35. I entered a 375 put for March 2024 on Nvidia. What do you think the probabilities are on Jensen committing fraud again? I don't know. Hold on, I'm just reading this. So, Gaff, is this any different than just like what's already reported through CNS? It's like CNS plus derivatives. Absolutely fucking not. That's what I'm saying. Yeah, I'm looking at like the proposals. Why didn't they just do this forever ago? Some of the additional participant rules are a bit different though. Like forcing corporations to disclose and asset managers and not just broker dealers. But I mean, all that's going to do is kind of split up what broker dealers are already reporting, right? Into slightly more consolidated baskets. That doesn't look like it covers bona fide market making or ETFs. It fucking doesn't matter, right? It's not gonna stop Kenny from dispersion trading the fuck out of everything. This is what I posted in FWFB. The majority of this is already data that if the SEC needed to have, they could easily get via CNS net off reports direct from the CAT. Whichever broker dealer is participating in already. This isn't for the SEC. It's to appease those who made a stink about short sale transparency and impact. The improvement on forensics here from the SEC perspective is the BFMM flag amendment to CAT. The rest of the reporting is old hat for those who already have access to CNS and CAT data streams. Yeah, it doesn't seem like it provides them a lot more like forensic capability. So it's mostly useless and slightly annoying for funds to implement. This is less impressive than they made it sound. Hmm. It's an extra step and money pit for their compliance teams to get hyped about. Looks like bullshit. Super Stonk's probably coming all over themselves. Then they're going to report the net aggregate short position on GME is non-existent. Oh, I hope they give us historic data. If it did, they would have fixed it 10 years ago when they implemented the updated CNS rule set and CAT initially. The historic would tell you if they covered or not. That's what I was hoping. I mean, they should be able to provide a historic data set. This is still failing to break out on ES. It's getting tight, but... looks gross. Still a failure for 25 or a breakout of 35. It's still just chopping. I will say that if we lose 25 again, 15 and 10 are stacked now. So is 4,300. And the 4,300 are probably sold, and those might get squeezed out too, like the 60s and 50s are. What does positioning look like at 4,330? Bearish. Net bearish. 43.35 still like the call wall. 43.25 is very bearish, and so's everything below it. I think they have 18 months to implement it. VIX looks beautiful on the 1 hour time frame. It's moving up. The weekly is starting to look a lot like fucking. Actually, the weekly looks really bad. Wonder what VVIX looks like. That's got to be changing. Ooh, fun. The best kind of bearish is net bearish. Well, technically it's continuously net bearish. They're going to be disclosing net aggregate short position through short positioning through Edgar. But it doesn't matter because like the all the big short players, they just use synthetic. They just use synthetic shorts anyway. They don't pay fucking borrow fees. So I don't think I don't think it's gonna change anything. Like it's not gonna stop them from shorting meme stocks or anything. Gaff, can you do me a favor? Can you give Rad $3 billion to refinance their debt real quick? Can we get some of those future sellers, please? We'll see. They might still try to pump. Not dead yet. None of it addresses internalization or the real issue, which is the unchecked FTD rollover that occurs specifically because of COT and CNS even existing, which is even further proof that this is. Leave me hanging, Gav. Worth holding some 43.50s into next week. Could be. SPX slightly ticked up since I entered the straddle, and my put value has gone up, and my call value is down. IV's a hell of a drug, Carl. Yeah, some of the puts falling off at 4,300. But the 43.15 and 43.10 are still quite strong. He's like the Hardy Boys today. Who, Gaff? Gaff loves irrelevant rule changes. Has he scheduled a VC to talk about it yet? Would you guys stop freaking out over every $5 move in a $5 range? Let us have our moment. It's ridiculous. It's like green candle, bears are fucked. Red candle, bulls are dead. Every $10 move starts with a $5 move, but we've had like 50 of them. It's been 84 years since I've heard him ramble. What if it's a $6 move in a $7 range? That's way more exciting. Question in Discord DMs. What do you think the 43.25 position was rescued there? Did they bother to close it, or was that just a pull out of that strike and reposition? It looks like they're pulling back risk at 50 right now. Hold on. Let me check something. Yeah, I'm gonna straddle the weekend. I'm glad I straddled today. Actually, I'm glad I straddle every day. That's bullshit. 43.35. It looks like they're closing a lot of the 50 calls. It looks like they de-risked some of the 20 and 25 puts. They some of the 40s and 50s too. Windmill. Less at 50 though than I would have thought. Yeah, I don't think the market maker really wants it here. It could fail. It may not. That's some momentum. Now it's a megaphone, yeah. There we go. 30, 4335 calls picking up. 4305, 4300 puts closing. Total delta's moving up too. I want to see something. Are they selling puts yet? Not a lot. Rip into close, please. I just built ladders on both sides of it. You think that's a good point to pick up a straddle? I might wait. Puts are like Vega's really high right here, and if Vega's gonna move down, picking up a straddle could be a lot cheaper later today. What's the WeBull account at? I have no idea. Where would the MM one at? Above 50? If we're gonna stay above 43.25, above 50. If we move like if this fails and we move back below 43.25, then they're gonna want it closer to 4,300 or 43.15. So this needs to break. Fuck, man. Fall's gonna get crushed on this so hard. Maybe I should have just gone at the money. I have a horrible cost average. 2,000 GME shares at 15.75 each. How's that horrible? I think that's far better than most people's price, like, cost basis. Yeah, what are you talking about? Are you just like trying to humble brag? Fuck. This market's so crazy. Yes, just fucking hard rejected at 43.65. My boss brought in a bunch of different cereals this morning for a cereal party. Not even pizza in lieu of pay raises. What's your favorite cereal? Captain Crunchberry slaps. Do they have Cocoa Pebbles? I know I don't speak from experience here at all, but I have a feeling this is only the beginning. Yeah, probably. Try one share, 6.969 for 20. Fuck out of here. The cat in Discord is too horny. You're gonna have to spray him with a water bottle. Which is he horny about? His calls or his puts? Cocoa Krispies? Like those aren't as good as Cocoa Pebbles. I just thought many people have been swing trading GME and bought back in under 15. That's why I felt my cost average is horrible. What? No one's swing trading GME. Why would you swing trade a stock that moves like 50 cents most days? What are the tips gonna cross and lock shafts? Not today. Fun? We finna chop here till 3? I don't know. That rejection was kind of nuts. Give me 1 second. All right. May as well throw the dancing bears up there. They deserve it after today. No, they fucking don't. Not if they can't get 4,300. They don't deserve shit. I just like the song. Pickle Jar doesn't deserve any bearish songs. I don't want this ripping to 5K. I close my call. I'm too tired to lose more money. That's half the fun. Oh, did Siri finally move up above? Nope. Why is IV increasing on it so much? The fucking stock is the same price I bought my calls at, and they're up 26%. Oh, shit. Oh. Microphone down. No, don't find support. Lose the support. Break 43.50 on futures. Let's end this shit. Gaps don't matter. I mean, they really don't. Like a gap that small is just irrelevant. There's a gap to the downside at 43.16. SPX has a gap around 850. Let's fucking go. That market maker is going to be so happy to get their money back after 20 years. VIX is above 20 again. Oh, that doesn't look good. With current liquidity, isn't it likely that gaps are created by the MMs? I mean, they are, right? That's how gaps occur. Well, at least on SPX. This is like way more stability than we should have at this price. Hmm. $250. This isn't SLD. I spoofed the MM and pulled my put buys. So they don't get their money back from gap fills. They throw their weight around to double up profit filling gaps. I mean, sometimes it's more valuable for them to continue hedging and making the market in the direction that participants want to. Well, participants are providing liquidity, right? So, or demanding liquidity. And so it's not always advantageous to fill a gap. Hmm. We got 25 back. God damn it. Shitty bears. Hmm. What are the chances for a crash over the weekend? I mean, never very high. Can you explain VIX backwardation? It's when the short-term contracts are more expensive than the long-term contracts. Or cheaper, sorry. Or more expensive. And then contango is when they're cheaper. So right now, spot VIX is in backwardation to the contract in front. Actually, it might be even more than just the contract in front. Hold on, let me look. Spot VIX is, yeah, so like the October contract's at 16. But that, I think that expires, no, that expires next week. The November contract's at 17, December at 1763. Jan's at 18. So like the current contract is higher than the November expiration, right? And the December and the Jan. And then spot VIX is higher than the current contract. Well, they're about even. It's a little bit higher. Is Megaphone actually going to lead to anything, or do you think we're going to close here? I expect volatility will increase as we move to the end of the day. Usually breakouts or megaphones are pretty intense. I think it'll lead to something. I don't know what yet, but I'm just like strangling this right now. How could a crash happen over the weekend if the market's closed? Well, ES opens on Sunday, so technically it could. What's Charm looking like right now? I mean, there's not a ton of it. Uh, the market maker is selling below 43.30. I'm pretty sure they'd be buying above it. Yeah, VIX hit 20 today. It's pretty fucking close to it right now. It almost hit 21. I see 1970.
It hit $20.78 today. We're forming a very nice diamond top, if I do say so myself. With the bounce here, it's not really something that happens on short time frames, but sure. Maybe. I'm thinking rally to flatten to end of day, then more downs on Monday. Is that where you're at? No? I still think this can move pretty hard either way right now. There's still enough interest below 43.25 to drive us down. And there's enough incentive to try to pump it above 43.50. So I want to look at Monday's expiration. How wide are your strangles? 5, 10, 15? From 42.25. So 16 expiration. There's a call wall at 43. There's a big fat call wall at 43.15. There's long interest at 43.60. The rest is puts. There's a shitload of puts at 4,300 and 42.75. Gamma flip point moved down. So there's another call wall at 45. 60. I wonder if they're selling these. That's a lot of put interest picking up. There's the 30 test. Yeah, this is about where we got crushed last time. Alright, let's see if they buy a shitload of calls right here. Stops. Shorting diamond tops in the 5-second candles becomes my favorite indicator. Power hour, woo. It doesn't feel very powerful yet. Have you seen Phil Mercrack? No. Why go to bonds when JPAS should hike more? Why go to bonds when you can throw everything at 7 meme stocks and they keep going up? Because over the next 5 years, those stocks are likely to lose value, more likely to lose value than they are to gain it. Far more likely. Bonds have a chance of losing a little more value, but probably not a lot more value. At what point do all these negative micro and macro forces finally make people capitulate and sell all their stocks or bonds? Like, what needs to happen? Lil Yachty dropping a new album? They just need to get scared. I mean, they kind of already have been selling a lot, but you need more of it. Fuck, futures are crushing it again. That's nuts. But just keep going. Like, don't stop at 25. Just blow up the risk. Yeah, there you go. Just fucking slam it. Still not hard enough. It needs to go harder. Ew. Do they run out of futures? Never. Wow, if they fail here, that's gonna be... Actually, I don't think I give a shit which way it goes. I just want it to move. This is ridiculous. I feel like they're about to pump the ever-loving schnitzel out of this thing. Both outcomes would be equally crazy, but right now we're not getting either one. Look at that wick. Yeah, I know. Remember an hour ago when you said this is gonna break soon? It's so tight. I wish you'd been right and also hitting on me. Yeah. God, this is fucking dull. SPX positive on the week. Crazy 50 BPS. Yeah, still up from last week. I'm just tuning in after a bit. Are we still bullish into next week? I feel like this weekend might breed fear. So I was thinking of picking up November SPY puts. Am I dumb? I mean, I wouldn't want to go into this weekend without both puts and calls. Especially if we go into this weekend with VIX above 20. Which, I mean, I feel like that's still less likely to happen than they try to pump it, but there's a lot of bearish positioning right here too. If put starts selling off though, that would be spicy. I mean, I think that's what the bulls are trying to do by defending here, is just like all of that out of the money put accumulation, like as it decays, the market maker is going to start deleveraging it, right? And that's going to provide upward momentum. Especially if we get above like 43.30. But at the same time, obviously the put buyers know that, and every time we test 43.30, they dump a shitload of futures. Maybe not a bad idea to have no exposure going into this weekend. Do you think it's just flat? I took profit on Vega plays today. Bad idea? I took profit on some of them. I sold like 20 of the Jans. Just in case they crush VIX again next week. Then I'll re-enter. Does GME price action today align with your expectations regarding FTDs? Do you have more hopes in ups for next week's FTDs? Not particularly, although they are higher. I'm more interested in whether or not the borrow rate is going to go up, because the illiquidity is now more pronounced on GME than its ETFs, which means that they're hitting the lending pool. There we go. Fucking finally. Now keep going. Don't stop. Oh, Jesus H. Christ. This is so ridiculous. Clown dicks. This is fucking absurd, dork. You should just pump harder. Like the Bulls have the advantage right now. We're above their call wall, so Well, at their call wall. I'm rooting for back to spot so hard. I bought 30, 35, 40 in 2015, 10. So I just wanted to put a bunch of either one side of the 0 DTE straddle or the other deep in the fucking money. Oh. It's not. I guarantee we're gonna end the fucking day at like 43.25 and just fuck everybody. I hate these fuckers. Classic clown market. If you had some centaur balls, you'd naked short 50k futures. Why don't you get a HELOC and naked short 50k futures? Bob, why do I need to do it? I know half of those 0 DTE puts are in here. I doubt it. What kind of house could afford 50k futures? I don't know. A really big one. Because you won't pay 1% over on RRP rate. That'd be like 50 million margin. Roughly. Okay, so we're not gonna break 35. Would condors be a good position for the weekend? With vol this high? I wouldn't. Market's still up 260 BPS since last Friday's low. I hope all of those nerds take profit and we dump. We'll see. Is there any point here at which bulls get some traction? $45? Yeah, 35 is not too bad. Is the SLD dump still a thing, or is it dead? It's still a thing. I mean, we had one. We didn't. I don't think we really had one in September. Well, it wasn't very long. But we had one in August. Actually, how did SLD do in September? I can't remember now. Oh, let me look. SLD in September. We dumped on Friday in September after rocketing all week. Yeah, September was kind of weak. I know August had a good one. Yeah, August SLD dropped hard. It went down like 360 basis points by Friday. I guess we'll see. Not sure if that's real or just happens to get pumped for other reasons. What? Oh, SLD going up? I mean, it only went up like a couple times. Want me to petition the MM to pick a side? Are you gonna do that by buying puts and calls? Looks like back to 20, then rip again to 28. Wait, what? The IV on series still, like, increasing. What the fuck? And now it's down. Now it's at a lower price. That's definitely Pickle Jar buying Siri. I don't think Pickle Jar bought that much. There's not that many of us. Hmm. The fuck? Interesting. No, Apple's not doing too great. Tesla's down today. Is anything up? DBS bounced. DBS Costco. Nvidia's almost back to 450. Jesus Christ. Amazon's down 2%. Free Tesla. It's Microsoft. What the fuck did Microsoft go? Oh. Down 85. Is there a benefit for picking up straddle legs throughout the day? Basically buying them when they're out of the money? Um, if you can pin like a neutral range like that throughout the entire day, then yeah, you can do that. We're pumping next week, right? I don't know. You'd think so, but the call side doesn't look super strong for Monday yet. That might change more in the next 30 minutes. Are we bearish end of day here? I'm literally whatever it does. I don't care. Under 43.25, the Bears have an advantage. Above like 43.35, the Bulls do. What's one nice looking megaphone? It'd be nicer if it did the thing megaphones are supposed to do. Longer dated on the put side, or are you strangling? I'll probably just strangle both on the 20th because it's got the best liquidity. Or straddle both on the 20th. But I already have long dated puts. I'm losing confidence about achieving 4,400 today. You could rip your shirt off in disgust. Oh, I never thought about that. Hold on. Let's see if we can break 4350 on our fucking like 7th test. Yes, 4350. Can we move an after hour close? That future's still open? What are you talking about? 4,000 Ps should be good for next week. Fucking ridiculous. It's only the 6th test. No, we had one before. I didn't count that because we broke it. We immediately bounced back though. Yeah, 6 from when we regained it. Oh, Jesus H. Christ. He can count, bro. You would think global instability would put 4,200, 4,100 on the table. You would have thought we wouldn't have rocketed off of news of war in Israel on Monday too, right? And yet, we did. I don't think that IMAB wants to close here, personally. Maybe. I feel like they'd rather close higher. Higher or much, much lower. It's like 40, 43, 45, or like 4,300. Flat on the day. 50 basis point move up before close. I'd take it. That'd be awesome. I bought my first ever real money straddle today. I hope you guys like it flat, flat, flat next week. $43.65. This is more like a microphone that doesn't work. This is horrific. I feel like if we were to rip, to the upside, they would probably try to bail out their 70s and 75s. There's still a lot of that shit sitting there. It's dead, but it's still sitting there. At the very least, they'd want to get their $60 short puts out of the money. In 30 minutes? That would be wild. Didn't we move like 50 BPS in 30 minutes yesterday? $31? I don't think it's that wild. We've moved more in 15 minutes, yeah. Earlier today, we dropped 50 BPS in 20 minutes. Then we dropped another 60 in 25. 30. Seeing as how neither can move the price that much, it seems crazy to think they can move it that much now. Well, if the levels that are acting as resistance and support here break, then I can move very rapidly, right? How about a futures dump? I don't give a shit which one it does, as long as it does one or the other. What happens if it doesn't break? We stay at 43.25 into close. Lame? Yeah. takes the chips. This is bullshit. It kind of sucks. What happens if the eggplant crop doesn't go well? Will you leave us to become a farmer? No? I, hopped on here to hear about rapid moves unless it doesn't break. So 20 minutes to expiry straddle. I don't know if a straddle's worth it. I strangled like 30 minutes ago. Maybe it's been an hour now. It's actually, I think it's been about an hour. Can you zoom out a second so we can see how ridiculous this really is? Sure. Quitting the market to a casino will forever be the easiest and ultimately effective FUD. I mean, right now it feels a lot like a casino. The real lasts this entire time. Orange juice futures. Yeah. You do anything non-stock fun this weekend? Maybe. Let's just go out with some friends of mine in Brooklyn. We'll see if I'm feeling up to it. Instead of making money from home, you can make far less working outdoors under crippling debt. Farming is the way to go. But I could get an ISDA if I had a farm. How do I better explain to my wife that we haven't lost all of our port? We just prepaid 30 years of taxes. She doesn't get it. Tell her one day you'll have capital gains. And you've prepaid those taxes. A what? An ISDA? I'm not gonna lie to her. Did you get approved for options yet, Pigeon Teeth? No. I'm up on puts. It's tempting to take profits. No, it's not. I have puts that are up right here. I don't want to close them at all. Why did those guys in The Big Short try so hard to get an ISDA when all they needed to do was start a farm? I don't know. Just pay membership dues every month because I like making stream cards. Thanks, man. Rug this bitch. I fucking hope so. Future still hasn't broken. It broke. It's just breaking 43.50 now. Okay, volume's moving up a little. Ooh. Where's your charm god now, Bulls? No! Fuck! I got stopped out of my 43.20s. Son of a bitch. That's not too bad. The market just needs a good 100 BPS sell-off into close in the last 15 minutes. It's been too long. We haven't had one of those since 2022. We got war. We got a second war. Everything's fucked. This is the most volatile market that's doing absolutely nothing. Inflation won't stop. Oil keeps going up. I wouldn't want to hold equities over the weekend. I'm not planning on it. Well, I'm going to hold some, but I'm hedged. Boiled Rainfall, welcome to Dillionaire. Thank you so much. Hit me up on the Discord. I'll get you added to the country club after the stream. One quarter of my high school is out with COVID, so that's a thing again. Oh, your kid's high school is out with COVID? Yeah, it's been picking up. Time for last minute bullish rocket ride up on penny 0 DTEs. If the puts capitulate here, I don't know how far we could run. $43.46. Some of my puts capitulated there. I still have a bunch of calls open. Although now I do have 25s. What does the top of that megaphone extend to? Like futures 43.70, which is yeah, like 43.40 roughly. Their short puts are still at 43.40. I'm still betting this market goes higher before the ultimate downturn. I don't disagree. I think we can still see upside next week. We haven't lost 43.25 substantially yet, so yeah, short puts at 43.40 0 DTE. Quite a lot of them. Worse yet, they sold them when they sold them out of the money yesterday when we were pushing up through like 43.50. If we get above 43.30, I don't even know if there's a chance for it yet. How many of these fucking puts are gonna just sit here? 10 minutes left? 8 minutes? There's calls for Monday at 43, 45, 55, and 50. Oh, maybe they get the 30s. Let's fucking go. $30, $40. Well, the closer it is to 40, the less they lose. Don't forget. Their confidence of being able to pump their way out of anything sickens me. It's fucking ridiculous sometimes. Six minutes left. Yes. Nice. Future sellers are back. I hit the take profit on my 25s there, which was awesome. It'd be cool if we could hit 30 too, but we probably won't. Yesterday was fun. Today was not fun. Fuck you. I'll see you again on Monday. See you Monday, Barry. Fell asleep in my chair for 20 minutes. What do you know? It's my old friend, 4325. Why do people come and talk to me about work when I'm trying to watch the market? I don't know. Puts Monday, puts every day. Less than a minute and a half left. I don't think I get this. I don't think I get the take profit on my 4330s. Although the 25s hitting was awesome. Those are like $1 each. Oh shit. 15 seconds? Oh fuck. So close. That wasn't too bad. Did you get it? I got a few of them closed, but not all of them. That's fine. 43.75. Here we come. Yeah, they defended 43.25. I traded poorly all day. GG. Have a good weekend. I don't think today was a day that should have been traded heavily. In hindsight. Cheers, bud. Have a great weekend. Thank you guys for tuning in. I guess let's discuss this a little bit. I mean, losing the majority of their Vega risk at 43.50 going into next Friday, and then almost closing today under their risk at like 43.25. This isn't good. They lost almost. This is the third time now that they're positioning above 43.75 has been blown up. This can't be a win, right? Like, I mean, I'll give it to the Bulls. They tried really, really hard, but this is just not going their way. What's up with Siri? I don't know. It's doing some weird shit today, so I bought a few more calls on it. It's not a steaming loss? Right? Right? What do you mean? Nice job, lost you again. Well done. I don't know what you mean. Anyway, so yields actually moved down all day today. So a lot of liquidity flowing out into the bond market. The 30-year down almost, no, exactly 2%. The 10 and the 20 down about 170 BPS. Dixie up on the day, but just barely. That one kind of kept moving between like, here, let me show you. Kind of just kept fluctuating between like the low end of like 106. And I think we topped out at 106.80. But we're back in the trend. So I mean, this is gonna continue to pressure volatility up. Especially if we get back above like 107.25 again and back above that November resistance level from last year. Gold rocketed today, up 300 BPS, silver up 400, oil up 570. So it looks like a lot of speculation and instability, right? Specifically in the Middle East, also, in currency. So yeah, we'll see. We'll kind of see how positioning shakes out over the weekend. Right now, Monday still looks pretty weak for the Bulls. They're still underwater. Vol closed today really high. We're still at 19, right? They do not have like a good call structure built up for Monday yet. So I mean, puts are definitely advantaged going into the weekend. I still expect that there'll be some attempt to de-risk more through the early part of next week, but that may not necessarily mean that we get higher highs, right? We may get higher than we're trading at now, but we may not break like 75 again. The next test to the upside, they may just de-risk 43.50, right? And then we're gonna fall back down, and then we might see them de-risk 25 and 4,400. But it seems to be that we're already starting to stair step down, and volatility is just increasing on the back of that. Yeah, we'll look at positioning. I'll go over what all that means in Pickles Picks on Sunday, and then we'll also cover some of it in the stream on Sunday as well. So I'll see you guys Sunday, 12:30 p.m. I hope everybody has a great weekend. Later.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing,